A very warm welcome to our today's panelist, S.S. Gupta ji, Ramesh Patodia ji, Avinash Gupta ji. A very good morning, sir.
Good morning.
I welcome Deputy Convener of Views Exchange, Nitesh Kumar More, and past Chairman EIRC. Welcome, sir. And I also welcome my Executive Committee member, Naveen Singhal, who will be there hosting this program and solving all the difficulties if faced any. I welcome you, Naveen. And I also welcome all the delegates who have joined in. For the past 3 days, we were having seminar on GST, and all the delegates who have registered are also registered over here. I welcome all of them. The session of today's is on Finance Act 2022. We have eminent speakers from Kolkata as well as Avinash Gupta ji from Delhi. I think this introspection of income tax, which we know will be required very much in our day-to-day affairs and will be very much important. So hope all the queries will be resolved and we'll be having a better practice sessions. Viewpoints will be gathered of eminent speakers, which will be knowledgeable and effective in our working affairs. So I welcome you all and request Nitesh Kumar More to kindly address the session, please.
Yeah. Good morning, everyone. Friends, the Finance Act that has been passed by the Parliament this week only, we thought that we should organize one seminar that would contain the in-depth discussion with the best of the best speakers. So we are very thankful to all the speakers. Friends, the past chairman EIRC, Rajesh Khanna ji, he has expired yesterday night by a heart attack. So I would request everyone to kindly keep silence for 2 minutes. So maybe start now. Om Shanti. May the departed soul remains in peace. With this pray, thank you, everyone.
Just one more thing, our past president, Mr. B.R. Maheshwari ji, also passed yesterday of the institute. So just a nice message for him also. Om Shanti.
Yes.
Thank you, Nitesh ji. Now, I would request Naveen Singhal to kindly introduce our today's panelists as well as speakers to our August House, S.S. Gupta ji, Ramesh Patodia ji, and Avinash Gupta ji. Over to you, Naveen.
Thank you, Naveen Bhaiya. First, I would introduce our moderator, CA Avinash Gupta ji. He is the fellow member of ICAI. He did his graduation from SRCC College, Delhi University, and was awarded the best student of the college. He is also in the merit list of ICAI in CA final. He is also a law graduate and completed his LLM in international taxation from Vienna University, Austria, Europe. He has authored 3 books on international taxation and transfer pricing. He has been elected to NIRC of the Institute of ICAI for the period 2019 to 22. Presently, he is the chairman of NIRC ICAI for the year 2021-22. He is president of Tax Research Foundation, an NGO doing research in the field of taxation. He has been nominated as YIN India representative for 2 years for International Fiscal Association, India branch, a Netherlands-based body. He is partner in APT and Company LLP, having head offices at Delhi and 18 branches all over India. He has delivered more than 1,300 lectures at national and international level. He is a visiting faculty at National Academy of Direct Taxes, Nagpur, DT, DTRTIS, SRCC, ICAI, ICSI, ICWAI, and um, management institutes. He is also a faculty member for certification course on international taxation for CS. He was a special invitee of Direct Tax Committee ICAI and International Taxation Committee of ICAI. He has experience of handling various international taxation matters, including transfer pricing matters of big corporates. He worked as finance analyst in PNG. He has won many laurels during school, college, and as a CA student. He presented many papers in international, national, and regional conferences on various topics of tax. He is a good orator and held many responsible positions. With this, I welcome you, sir. Next, I have the honor to introduce S.S. Gupta, sir, who acquired his CA qualification in 1973 at an early age of 19, securing first rank in Eastern region in CA final examination. He has worked as a vice president of finance with the AV Villa Group. He had established S. Swaroop and Company in 1984, and over the years has gained immense experience and expertise in income tax. Sir provides expert consultancy on income tax matters to various leading CAs and advocates. He is a renowned expert in the field of taxation. Mr. Gupta regularly represents his clients before the appellate tribunals such as ITAT and CIT appeals. Owing to his expertise and experience, he is a regular speaker in various seminars and synopsians organized by various industry bodies, chambers of commerce, and ICI. He has addressed synopsiums in Singapore, Thailand, Nepal, etc. on topics like double taxation avoidance agreement. Some of his professional associations and affiliations are as follows. He is the co-opted member of Direct Tax Committee ICAI for 2015-16. He is a life member of Association of Corporate Executives and Advisors Kolkata, life member of DTPA Kolkata, member of Merchant Chambers of Commerce Kolkata. He has traveled widely to USA, UK, France, Switzerland, Dubai, Kuwait, Singapore, Hong Kong, Indonesia, Malaysia, Thailand, Nepal, etc., and where not. With this, I welcome you, sir. Next, I have the honor to introduce our learned speaker, Ramesh, sir. Ramesh, sir, is in continuous practice as a CA in Kolkata for the last 35 years and has been practicing in consultancy and litigations in the field of direct and indirect taxations, FEMA, etc. FEMA, etc. He is a regular speaker at several professional organizations and is regular contributor to various publications by way of articles on professional topics. He has also written several books on professional topics, including commentary on Hindu undivided family and complete guide to reassessment under Section 148 of the Income Tax Act 1961. He is also a member of the Direct Tax Committee of ICAI. He is also a trustee of Shri Rani Sati Mandir, Junjunu and Gayatri Foundation, Kolkata. With this, I welcome you, sir.
Thank you, Naveen, for introducing all our panelists today. A warm welcome to all of you, sir. Just before we start the meeting, a brief information that will be putting all the audiences on mute mode. If anyone wants to have any question answer session, please raise hands or put in chat box. we'll be unmuting them as per the request of our speaker. Over to you, sir.
Yeah,
Avinash.
Naveen,
Yeah,
they can put in the chat box only. They can put in the chat box. At last, we can take those who want na raise hand and all this.
As
That
per
will
the
be better.
discussion of the panelists, we can do. Over to you, Avinash ji.
Thank you. Good morning to all of you. My respected speakers of the day, SS Gupta ji and Ramesh Patodia ji, the past chairman of the EIRC, Nilesh More ji, who have invited me to moderate this today's session, other panelists, Naveen Khemka ji and Naveen Singhal ji, Pradeep Goyal ji, and friends. Today we are here to discuss the nitty-gritties of the Finance Act 2022, though now it is also notified. And this Finance Act, we all know that this time it is very, very technical bill, what have been presented by our Honorable Finance Minister in the Parliament. And these bills are having far-reaching impacts on the assessments, on the tax law in India. And every time when I read some provision again and again, the new thing have come up. And we have two experts with us, SS Gupta ji and Ramesh Patodia ji, who are in practice, who are dealing with tax laws even more than my age where I am coming, but still I'll try to put as many as questions to both the speakers to reply and to respond. If participants, if you have any doubt, any query, so I request you, I have opened my chat box, so you can raise these queries in the chat box so that I can possess this question on the to the speakers to reply. I think the format, because of the moderator, so I may we may take one section each, one by one, and then accordingly we can debate on this that what exactly have done and what are the different views which have come. So if you permit me, sir, so should I start from one by one? Can I take the sections one by one?
Yes, yes, sir.
Sir, I think the first section which everybody is concerned about and which is also very important for all of us, the practitioner, is section 68. So there is an amendment which have been brought in section 68, whereby the loan transaction have also been incorporated. So I just want your views on section 68 amendment by the Finance Act and what would be the impact. Many of the professionals are also worried whether this will impact the past transactions, which are loan transactions, which are there in the books as on 31st March 2022, because the section is applicable from 1st of April 2022. So whether it will be applicable only for the new loan transactions which have been taken, or it is a past, and if the new transactions are taken, then what are the documents which they need to maintain so that there would not be any problem at the time of assessment. So may I request Gupta ji first to start with section 68.
Yeah. First of all, good morning to all of you, all the participants, organizers, learned Ramesh Patodia ji, learned Avinash Gupta ji, Nitesh More ji, and everybody. Coming to section 68, friends, what has been amended? The 68 casts a responsibility on the borrower or receiver of any funds to establish the identity of the person who has given the funds, to prove the genuineness of the transaction, and to prove the creditworthiness of the transactions. Now, these three criteria have to be established and had to be established all along whenever there was a question about the genuineness of any loan taken or any borrowing done or any share capital raised. So all along the view was that once I have established the genuineness of the transaction, the capacity of the lender and the identity of the person, then what the onus was said to have been discharged. And it has been stated that I am obliged to prove only the immediate source of my borrowing. That is, if I have borrowed from, say, X, then if I can establish that yes, X is an identifiable person, he has adequate resources or funds to give money to me, then it would have it used to be stated that my onus is discharged. Sometimes the revenue wanted to know that what are his sources. Then for that purpose, all along a judicial view was taken, and the one of the oldest decision is that of the Madras High Court in the case of S. Hastimal, that was reported in 49 ITR. Even in that decision, it was stated that what I am obliged to prove is only the source and not the source of source. Now, in the year 2012, there was an amendment to section 68 by inserting a proviso, wherein it was stated that if I am a closely held company and if I receive any share capital or any share premium, then the person who makes investment, and that person is also required to come and prove his sources. So that amendment was applicable when share capital was being raised either at par or at premium. Then the onus stood discharged only when the subscriber or the investor also comes and explain his sources. That was an additional burden cost, but that was applicable only effective assessment year 13-14 and not earlier assessment years. And courts and tribunals have already taken a view in this case that this amendment is applicable prospectively and not retrospectively. But that was confined to only the share capital and share premium raised. And in that case, another aspect was that only when it is raised from the residents. If it is raised from a non-resident, then also that proviso was not applicable. So based in the legal position, now because it was confined only to share capital and share premium, it was all along been argued that in case of loans and borrowings, the earlier legal position continued to stay. That is, only the immediate source need to be explained, not the source of source. We have the benefit of Gujarat High Court decision of Rohini Builders. In that case, this thing was also repeated by the Honorable Gujarat High Court that source of source need not be proved. And even SLP filed by the Income Tax Department in case of Rohini Builders, that was also dismissed by the Honorable Supreme Court. But now this Finance Act has amended and added an additional burden even in case of loans or borrowings. So if it is a loan or borrowing from any person, then the onus has been cast on the person giving the loan or borrowing to come and explain his sources. Sir, if you read the amendment properly, it is not my onus. The person giving the loan has to come and explain. So I tell you one practical example. If I am in need of funds and if I go to some financer or lender that, sir, this is my need, this is my business, this is my project, can you please lend me? If he trusts me, if he has confidence in my abilities and my etiquettes and my financial strength, then he may be willing to finance me. But if I tell him that please also tell me how do you earn your income, from where you are getting your money, and in case my income tax department wants, you have to come and explain your sources. If you read the proviso which has been inserted by Finance Act 22, that says the person giving loan or borrowing has to come and explain his borrowing. So that, according to me, is contrary to the real life situations. If I go to such a financer, he will say, I'm sorry, I'm afraid. Because once you tell him that you need to come and explain why he should, why he is helping me, he is giving me some funds. Now, these proposed amendment is excluding only venture capital funds, etc., from the exclusion of this new proviso. It does not exclude banks and financial institutions also. Now, the question which was raised by Avinash ji, that whether it is whether it will apply to past transactions also. Well, friends, my understanding is that if you read the memorandum explaining the provisions of the finance bill, this is not a retrospective amendment. It applies from 1/4/22. Therefore, it will not, and going by the judicial precedents which were rendered in the context of the 2012 amendment, there also it has been said that that amendment was prospective and not retrospective. So going by that, it can be said that it is not a retrospective amendment, but a prospective amendment, and it will apply only to loans and borrowings taken with effect from 1st of April 22. Now, another aspect is source of source. Source of source to what extent? How many sources would you like to explain? Because if we go by the practical experience, the department was, if I have borrowed some money from Mr. A, then the department wants the sources of A to be explained. The moment I have explained the sources of A, suppose A has borrowed from B, then the department says that you also explain the B sources. So, I mean, this is never ending. But going by the legal reading of the provisions, I for one would strongly believe that I need to explain only the source of my lender. Thereafter, I do not need to go to any third aspect. So this is the extent about which I need to go. Another thing is another aspect in relation to 68 is, unlike share capital and share premium, there, if the share capital and share premium was raised from a non-resident, then I did not have the obligation to prove source of source. But here it is absent. If there is a loan or borrowing from a non-resident, then I will have the onus to explain his sources also, because that is not excluded as it has been excluded in the 2012. And then another thing is, it says any loan or borrowing or any such amount. Now, the expression any such amount, will include any amount or any money received from a third person on which I will have the onus. Like, friends, going by the principles of ejus dem generis, any such amount should also take its color from the earlier expressions loan or borrowing. Therefore, it is, I mean, the amendment should apply to only loan and borrowing. I think these were the few aspects, Avinash ji, I thought on 68. I mean,
Thank you, sir. Patodia, sir, if you want to add something on this.
Yeah, I want to, Gupta ji, thank you for giving such a beautiful deliberation on section 68. I have only few points to add on what Gupta ji has already given his view. That an important point which is to be noted is that as far as the share capital which was taken and which was covered in the year 13 or 12, whereby the source of source in respect of share capital was required to be proved. And since share capital can only be in the case of a company, so only companies were covered in that.
only closely held companies were covered.
Closely companies were covered. Public limited companies were not covered by the rigors of section 68A to prove the source of source. But now if we see the amendment which has been made by the Finance Act of 22,
that includes everybody.
there is no distinct particular class or the. Therefore, whether the SSC is a private limited company or a listed company or an individual or HUF, it applies in blanket. So the field is very vast now. The money, even the listed company, even Reliance Industries taking a loan, they will be called to explain the source of the person from whom the loan has been taken. So that is one important aspect of section 68. Second important aspect is, as Gupta ji also touched it, that the amendment says where the loan or borrowing or any such amount. Now you see, in the practical situation which we have been handling day in and out during the course of our profession, all of you must have also faced that now when the shares are sold and say you are receiving the shares, the amount on transfer of shares through the mechanism of stock exchange, there also section 68 is being sought to be applied. I have got few cases where, like, say, broker has given me the money, and now what the department has done in few of the cases which we are handling, the department has taken details of the share transaction from SEBI, where they have gone to the extent of who was the counterparty where I sold the shares. Maybe the broker was, say, X or Y. Maybe the broker is, say, SDFC Securities, or a small time broker, an individual broker. Now, we always used to say that, you see, the transaction has been done through the medium of stock exchange, and I don't know who is the person who has bought my shares, and therefore I should not be under an obligation to prove the source of source in that situation. However, now the department is giving you the details of counterparty who has bought your shares, and that too certified by SEBI. So, and in such situation, they have tried to apply section 68 in case of even sale of shares. So this is one particular thing which will continue to bother the SSEs. In the light of recently, all of you must have noticed that section 148A notices are now coming like section 131 notices. 148A notice now. So that is one. And another aspect, another thing which I would like to bring it to this August audience is that in one of the cases which we are handling, where what happened, the assessment proceedings were concluded, and under section 148, the reasons were cash credit only, and the 148 order was passed where the assessing officer has emphatically recorded that the onus which lied on you got discharged in the order under section 148. Now you see that order is subject matter of 263, and after 263 a fresh order has been passed where the assessing officer is saying that the onus is not discharged. So therefore, I fail to understand that whether when an assessing officer has already made an observation that the onus has been discharged, can it at any subsequent point of time becomes undischarged at the dictates of his higher authority? These are few practical issues which I think the audience may be facing, but section 68 coupled with section 115 BBE, so virtually your entire money is lost if you fall in the clutches of section 68. So it's a very, very onerous provision, and while you are borrowing the money, you are taking any form of credit. Where maybe if you are making purchases, suppose if you are making purchases nowadays, a lot of people are getting 148 notices that GST department has given information to the income tax department that this is a false purchase. So therefore, they are trying to bring that also under section 68. So the field is wide, very wide and vast enough. And I think as far as professionals are concerned, it's a matter of rejoice. Only for the other side, they may be in trouble. That's all. Yes.
Thank you, sir. But in my humble opinion, I believe that what Gupta ji have said, if we read the word any such amount, it has to be read in conjunction with the earlier two words, which is loan or borrowing. So any amount which may not be exactly loan or borrowing, but in the same nature. I just give you an example. There might be a compulsory convertible debentures. There might be a normal debenture. There might be a commercial papers, which is directly cannot be classified as loan or borrowing. So the company have issued or the person have issued commercial papers, etc. So I believe that any such amount refers to all these instruments which are in the nature of loan or borrowing. So the transactions which are other than loan or borrowing or in the nature of loan or borrowing may not be clubbed here. But as we know, the department, the AO is supreme and he can think anything. And he may say that any such amount will include all the things in future. So yes, there may be a n number of appellate work which will come to all of us for any other sum, but I agree with Gupta ji that it should be, ideally it should be loan and borrowing in the nature of that only. One thing what I have observed, sir, here is that though they have earlier provision is only applicable for residents, that whatever money, a share application money, etc., which a company have taken from residents is covered. But this provision is also covered in a non-resident case. Now it will open a long plethora of transactions where the companies are receiving compulsory convertible debentures and other instruments from countries like Mauritius, countries like Singapore, Cyprus, Isle of Man, etc. So till date, what we are submitting to the department, that these are all foreign transactions, and we are submitting only the balance sheet of foreign countries. Now these companies who are subscribing for these debentures, etc., in Indian company, they are generally paper companies, and there is a back-to-back company or a trust there. So now with this amendment in 68, so the department will ask the assessee, which is generally the Indian resident, to prove that what is the source of those transactions. Now we should be ready with this. But yes, this is an amendment which will impact all of us, because in our individual files also we may have taken loan from somebody on or after 1st of April 22, rightly pointed out by Gupta ji that it is prospective amendment. Sir, we have one question from Naveen Damani. He said that suppose if the onus is not discharged, if the source is not proved, who will be penalized, whether the lender of money or the receiver of the loan? Who will be penalized under this charge? Yes, Gupta ji.
Well, as I already spoken, that if we go by the language used in the provision, the onus is on the person giving the loan or funds. So and obviously his failure to come and prove his source will impact only the borrower, that is the assessee in whose books this loan or borrowing is taking place. But on discharge of onus, a very useful decision from the Supreme Court that is reported in this 159 ITR Odisha Corporation Supreme Court decision, that always has always helped, and according to me is still going to help. In the facts of that case, when I have given the GIR number of the assessee earlier, prier to PAN it was GIR number, then even if the 131 came returned unserved, still the Supreme Court has said the assessee has discharged his primary onus. Therefore, it goes to the, now with these amendments, the onus will be discharged only when the lender comes. So the sufferer will be the borrower or the assessee, according to me, in case of non-discharge of onus. I think that was the question.
So I think this is the question, and we hope that that have been answered. Now let us go back to our main topics of the day, which is generally we are talking about the PGBP. So there are 4 amendments which have been proposed in the chapter of PGBP. One is 14A, another is 37. Then we have one amendment in 40A IA also. So there is one related amendment which is there under 79A with respect to the set off. So these all we are taking it together as the amendment in the PGBP chapter. So may I request Ramesh Patodia ji, if we can start one by one, and then one amendment you take and one amendment may be taken by Gupta ji. So any amendment on the PGBP will start with that, because there is no amendment in the salary chapter. There is no amendment in the house property chapter. In the salary, there is only one COVID related amendment that we will take at the end. So we'll go with the main amendments on the PGBP that we have. So Patodia sir.
PGBP the one most important amendment which has been made, I will directly come to that first, is the amendment in section 40A subclause IA. 40A subclause IA is the amendment which has been apparently or admittedly, if you read the memorandum explaining the provisions to the finance bill, the Calcutta ITAT has the credit to drive this amendment. so to say. Because the Honorable Calcutta ITAT, in the case of Patodia Chemicals, had taken a view going against its own decision of Calcutta Tribunal itself in earlier decision. The fellow Calcutta Tribunal earlier itself had held that the cess and surcharge are allowable expenditure and they are not covered under section 40A IA. However, Patodia Chemical did not buy that argument, and it was a well-reasoned order. And in my personal opinion, the decision of Patodia was a correct decision, and all other decision of Bombay High Court in Sessagoa and other decision, there was a Rajasthan High Court decision also, where it was held that the cess and surcharge is allowable. And the primary force which was the driving force before these honorable courts was the circular which was cited by the SSCs in those cases, which was a 1967 circular. And so the court was basically guided by that circular, I would say. But when I see this whole thing is that the circular, as rightly said in the memorandum, was a circular pronounced in the year 1967, and that circular was in the context of a cess which was levied in relation to a levy in the State Act. State was levying certain taxes and the cess was levied, and the circular clarified that the cess which was applicable on the levy made by the state was not to be disallowed. It was an allowable expenditure. But that was somehow inadvertently, I would say, was referred to in these tax cases, and it was argued that it is cess is allowable as an expenditure. It is not covered, and the courts also did so. But now, taking cue from the Srinivasan's case of Supreme Court, where Supreme Court had clarified that cess or surcharge, etc., on tax are nothing but part of the tax itself. And that is a reasonable, I think, interpretation. Because and one more thing, if the cess and surcharge which were being allowed, they were apparently introduced in the year 2004. So therefore, when something has been introduced in 2004, how the circular of 1967 can interpret that levy, one fails to understand. So therefore, rightly, this amendment has been made by making it, by providing that it will not be allowable as an expenditure for the purpose of computation of income. However, friends, what disturbs me is the fact that this has been made applicable from 1/4/2005. So therefore, it is applicable for last 17 years now. Whatever has been any SSC who has claimed this as an expenditure will now be subjected to rectification under section 155 subsection 18 of the Income Tax Act, which has also been introduced by the Finance Act of 2022. Though there is one decision of Supreme Court in the case of Bombay Dyeing, which is reported in 34 ITR. The decision of Bombay Dyeing in the case of 34 ITR, page 143, where Supreme Court was considering somewhat similar situation in the year 1958, I think, that some amendments were made retrospectively, and the same was tried to be rectified by the assessing officer in that case under section 35 of the 1922 Act. And the same was subject matter of challenge before High Court, and High Court decided in favor of SSC, and the matter went up to Supreme Court. And Supreme Court in Bombay Dyeing's case held that during those years also, the time period for rectification of mistake was 4 years from the end of the assessment year. And in that case, the retrospective amendment for the year which was being sought to be done was falling within the 4-year window, as was there in the statute at that time. So Supreme Court said that, look, when an assessing officer under section 35 can rectify any mistake within 4 years, and this the year for which this amendment has been done falls within 4 years. Therefore, we do not agree with High Court, and the Supreme Court reversed the judgment of High Court by holding that the retrospective amendment can be subject matter of rectification under Section 35 of the 1922 Act, which is pari materia to Section 154 of the 1961 Act. Now, 155 subsection 18 has given a fresh lease of life of 4 years. That is from 1st of April 2021. For next 4 years, the assessing officer can issue you the notice for last 17 years and make this subject matter of disallowance. No, to add what say नमक के माने जले के ऊपर नमक छिड़कना जो हिंदी में बोलते हैं, to add to that, it is specifically stated in the provision of Section 155 subsection 18 that penalty for under-reporting of income would also be applicable if you don't do it yourself. I think Gupta ji and Avinash ji, they will also give their deliberation on this, that how penalty can be applied in this situation for under-reporting of income due to retrospective amendment of law. I was always under the impression that penal provisions cannot be applied retrospectively. Penalties cannot be, you can't be asked to pay penalty and interest for the amendments which have been made retrospectively, but somehow the provisions have been made in such a way that you are even liable for penalty unless you yourself deposit and take the benefit of Section 270A subclause. But there is one clause where you can, you are not liable to pay the penalty. So this is a very, very important change which has been done. And I think before we move on, let us take the views of Gupta ji and Avinash ji on this particular important provision of the law.
Gupta ji, please.
Yeah, my submission and my take on this is that this 4 years will be counted not from 1/4/21, but it will be counted from the end of the financial year starting on 1/4/21. The department can go up to 31st March 26 for coming for this, number one.
Exactly.
Number two, as we all understand, basically what was being done was a gross and wrong mistake. If we go into the history of this legislation, that circular of 67 was issued in the context of, as rightly told by Ramesh ji, in relation to the state taxes, the taxes being levied, indirect taxes being levied, and cesses being done. Therefore, the education cess for the first time started in 2004 at 2%, and then in the year 2011 to 4%. So in these 2 years, so it was being, and those decisions of Honorable Bombay High Court in the case of Sesagova and the Honorable Rajasthan High Court in the case of Chambal Fertilizers, they clearly ignored in those decisions the earlier decision of the Honorable Supreme Court in the case of K. Srinivasan, wherein it was held that this additional tax and additional surcharge are nothing but they are part of tax. That was the controversy. So those decisions of Honorable Supreme Court were neither cited nor discussed in these two decisions of Bombay and Rajasthan High Court. Therefore, that decision can be said to, those decisions have been very rightly held by the Honorable Calcutta Tribunal to be as per incurium. And therefore, this amendment, according to me, is a valid amendment. There are cases, even from our office, some cases, people have claimed a huge amount on account of education cess. Now, to save themselves from the penalty of 270 capital A, the correct approach is the severity is going to come out with a prescribed form and the prescribed time limit by which you have to make an application yourself that a necessary rectification may be passed under 155(18). That will save you from this penalty. In absence of that, they have been very specific that it will constitute an under-reporting
And they have also stated that the exclusions from underreporting as contained in 270 capital A subsection 6 will not apply in this situation. Therefore, according to me, with great respect, there will not be much scope of litigation on the, because the law has been made expressly clear. Unless and until the law is being struck down, which according to me is not going to be the case. Basically, what is this? It is a cess on income tax, on surcharge. Now, when surcharge and cess, हम लोग जब दूसरी जगह आर्ग्यू कर रहे थे, I had an occasion to argue a case in relation to MAT credit, where I was arguing that cess and surcharge MAT के टैक्स में लग के हमको क्रेडिट मिलनी चाहिए. I was relying on case Srinivasan in my favor. So, and the appellate authorities have allowed me that benefit कि MAT credit आपको include करके मिलना चाहिए. यहाँ पर हम उसको इग्नोर कर रहे हैं. With great respect, the amendment is in true spirit of law. It is advised SSCs who have made claims, who have been allowed this benefit, should suo moto make an application as and when the forms and time limit are prescribed. That is what I wanted to add.
Thank you, sir. On this, this is the first time that I am seeing some amendments which have been moved by the CBDT, which says that there was a legal question of law because 2 high courts have already been given judgment in the favor, and there was an established what I can say, a procedure that penalty cannot be levied wherever there is a question of law. So here it's a pure question of law whether the surcharge and cess would be deemed to be the tax and covered under the disallowance under section 40 IA, which High Court have already stated in negative form, saying that these are allowed as deduction first. Now the board have come up, now the CBDT have come up with a retrospective amendment, and that too since 2004 itself. So now the question is that after a retrospective amendment, the same thing was there in case of Vodafone, in case of Kane also, whereby they have brought a retrospective amendment, and because of that retrospective amendment, they are not only asking the main tax to be paid, but they have also levied a penalty on the SSCs. So now my submission, humble submission is that how can any government will apply a penalty? Yes, you can recover tax, that I agree. So they have done all this, but they said that if the SSC do not come up with us in the prescribed form and within the prescribed time and ask the assessing officer to recompute, and not only that, and deposits the tax within the specified time, which might be 30 days as specified under the provisions of 278 AA, that in 30 days you have to deposit also, then only you will be eligible for an exemption from the penalty. Otherwise 50% penalty will be applicable. And for their convenience, they have amended 155 to reopen all these cases by way of an rectification to be passed for next 4 years, starting from the initial year. So this is something which I fail to understand, that why these kinds of amendments is important. But law is law, and as rightly pointed out by Patodia ji and Gupta ji, that if any of your SSC, any of the client who have already claimed this surcharge and cess in their return of income as deduction, now the board will notify the time limit as well as the form. You need to apply to AO to recompute it, pay the tax within the time, and then only you will be saving the penalty. I also agree with Gupta ji that there is less scope of litigation on this particular matter nowadays, unless the constitutional validity of this provision itself can be challenged there. But again, in that also, I believe there was very limited scope, because normally the courts do not entertain these kinds of petitions. So it is better that you start preparing and telling your clients that for this particular amendment of cess and surcharge, if anybody have claimed it, then they should be ready to pay tax by going for a recomputation. So
I have to add, Gupta ji.
बोलिए.
I am addressing, since आप लोग बहुत ही गुप्ता हैं, so both the Guptas.
चलिए सर, आपका काम तो आपका 8 आना है.
I have one point to add, sir, that as far as this amendment is concerned, there can, some differentiation can be made between those high courts which had pronounced this particular issue in favor of the SSCs, vis-a-vis those states where there was no jurisdictional High Court's decision, because virtually Bombay High Court decision is applicable in the state of Maharashtra as a law, going by the law of precedents. Bombay High Court's law decision is a precedent. So therefore, to what extent the department can ask me to pay not only the tax but interest also and penalty, I have a difference of view, and in my opinion this matter will definitely go to the courts, and where the levy of interest as well as penalty on this particular amount will definitely be subject matter of challenge, that there cannot be any penalty and interest on account of retrospective amendment of law. That too on an interpretation of law as has been agreed by the Honorable Finance Minister in memorandum itself. But definitely will crop up, I think, and that is good also in a sense, I will say, because it always helps interpretation of law as far as this particular kind of things and areas are concerned. Yes.
I think that you are absolutely right on this part, because in Sesa Goa case, because Sesa Goa happens to be my client only. So in Sesa Goa case, after this Bombay High Court order, even the tribunals are giving relief on this part. So it is same like what we have an amendment last year, whereby the contribution, the employer contribution to PF and ESI, whether it is covered under 43B or 36 will come. And now tribunals have already started giving relief to all the SSCs, saying that these amendments are only prospective, and for the past case they will remain under 43B. But here the only difference is that this amendment is retrospective. So earlier last year the amendment was prospective, so this is retrospective. It is good to see in the future that how the courts will interpret this particular amendment that will be there. And I think that Bombay High Court decision is being challenged by the department in the Supreme Court. So let us see what will happen in that particular case when it reaches to Supreme Court. And yes, but those who are not in appeal, those who are whose case may not be picked for scrutiny, so they may try to reopen it by 154 by doing this 154. And for removing the penalty or for taking the exemption from penalty, they may opt for paying their taxes along with the interest. So that is, one can go for it. So can we move further to second amendment, sir?
Yeah. Now let us move to section 14A. Gupta ji, you will drive this 14A?
Yes, yeah, I'll do
that. Sir. Okay, sir.
Well, friends, so far as section 14A read with rule 8D is concerned, briefly, what is 14A? Expenditure incurred in relation to earning of an exempt income have to be disallowed. They cannot be allowed as a reduction in the computation of your income. Now, all along it has been held that when there is no exempt income is earned, then there cannot be a disallowance. These are the views of the judicial courts and the tribunals across the country. But CBDT came out with a circular number 5, dated 11th February 14, wherein they said that even in absence of an exempt income, if you have incurred certain expenditure incurred in relation to that income, whether that income is accrued, not accrued to you or not received by you, still that disallowance should come into picture. Well, friends, in that, I mean, and that view has, now that first of all gives us a controversy that there is a CBDT circular contrary to what has been held by Supreme Courts or the honorable courts of the country. Now, there I would like to have a precedent of Honorable Supreme Court reported in 243 ITR 808, Hindustan Aeronautics Limited's decision, wherein the Honorable Supreme Court clarified that whenever there is such a situation when CBDT circular is contrary to courts and High Court and Supreme Court decision, then what has been narrated by High Court and Supreme Court should prevail. So based on that, even in the presence of that circular, courts and tribunals were taking a position that in absence of exempt income, there should not be a disallowance. Now, That position has been nullified by making amendments in this act, that even if you don't receive any exempt income, I mean, either you don't receive or it has not been accrued to you, still if there are so 2-3 points which arise out of this amendment. One is, first of all, there must be incurrence of expenditure for earning exempt income. In absence of any expenditure incurred, there cannot be a notional disallowance or calculation under 14A with Rule 8B. That is one thing. That position continues. And the second position is the most important position, which is creating a doubt. If you read the explanation which has been put by this amendment, is that this position is deemed to have been all along the same position, whether this amendment is retrospective or it is prospective. Friends, for that the answer is given in the Supreme Court decision of Vatika Township. That how do you decide whether a amendment is retrospective or prospective? The legislature, the judiciary has rights and powers to bring retrospective amendments. That cannot be challenged. But in a situation, how you will decide whether it is retrospective or prospective, you need to go to the memorandum explaining the provisions of finance bill. That is what has been stated in this Vatika decision of Honorable Supreme Court. Now, if we read the memorandum explaining the provisions of the finance bill, it has been specifically stated that this amendment will apply with effect from 1/4/22 and assessment year 22-23. Therefore, according to me, this cannot be applied retrospectively. So people should not have a fear or apprehension that wherever they have been allowed the deductions in absence of exempt income, and even I had several cases to argue with the tribunals and appellate authorities wherein the benefit has been given to our assessees. So I am of one of the opinion that for past years, going by the wordings of the explanation, this cannot be held to be retrospective. And for this, we have an example of the amendments of 43B and 3615A last year. Courts and tribunals are regularly taking a view that it is prospective. वहाँ भी यही wordings थी, यहाँ भी यही wordings है. That is what is about 14A. So no apprehensions about the retrospectivity.
Anything you want to add?
Yes, I would add one important aspect of this amendment is, when we read the explanation which has been inserted, the explanation reads, I will read few lines because that is important. For the removal of doubts, it is hereby clarified that notwithstanding anything to the contrary contained in this act, the provisions of this section shall apply and shall be deemed to have always applied in a case where the income not forming part of the total income under this act has not accrued or arisen or has not been received during the previous year relevant to an assessment year. So it covers income which has not accrued or arisen or has not been received during the previous year. These three types of income are sought to be covered. In the context of corporates, where they have a huge kind of a, say, corporate structure with maze of companies, and you see, we day in and out see that the intercorporate borrowings are done in a corporate structure. And in most of the cases, either I would not say most of the cases, in cases just based on the commercial expediency, the interest is not charged on the borrowing. It happens in cross-border jurisdiction also. And sometimes what happens, even when the interest is charged, say in respect of some loans which are given, later on the loans are made, say, interest-free on account of some event, on account of commercial expediency, which has been accepted by Supreme Court in 288 ITR. So therefore, In those cases, it has always been held by courts that interest cannot be disallowed under section 36(1)(3) of the Act, even if you have invested the borrowed money for investing in your subsidiary on account of commercial expediency. So the question is whether those kind of situation will get diluted in view of the amendment which has now been made in section 14A by putting a specific explanation where they are covering that the income has not accrued or arisen, because we always try to give the rationale of Surji Ballabdas 46 ITR that interest has not accrued to me. It has been waived, Baroda distributors case. So whether those kind of, even if you go out of the clutches of section 36(1)(3), the department will try to apply section 14A in those kind of situation, and it will be a huge dent on corporates who have done inter-corporate borrowing in my submission. That is an important point I wanted to highlight.
Sir, I just want to add, Sir Gupta ji, if you give me 1 minute. So on this point, what Patodia ji have said, sir, for the inter-corporate borrowing, if you talk about, I believe, sir, whether an interest is paid or not, that interest was never been exempt. So if a company have given a loan to another company, even if it is outside India, I have given a loan under a ODI route or whatever way, if an interest is being earned out of it, that will always be taxable. So there is no exemption. So I believe that for applying this particular explanation to them, the basic condition has to be fulfilled, which is that if there would be an income, that should be an exempt income. If that is not the case, then I have my doubts that explanation will not work if the basic provision of the section is not fulfilled. So nowadays, because dividend is also taxable, so whenever a company is making investment in another company and there was a shares which have been held as assets or investment in the company, so whatever dividend, whenever it will come, then it will automatically be taxable dividend. It is not exempt dividend. So in the absence of the fulfillment of the provision of 14A, I believe in my limited summation that the explanation cannot be invoked in those cases when dividend was not given. Maybe I have taken a loan from a bank and then invested in a subsidiary, or maybe there was a foreign loan, ECB or CCD have been taken on which I am paying the interest to these parties and then invested this in a downstream investment. I believe that this explanation is not applicable. As far as retrospective is concerned, I believe this is the same what Sir Gupta ji have already mentioned for 43P. I just checked the language, it is exactly same. So we can interpret. Yes, Gupta ji, I think you want to add something.
Now, only one thing I want to add in this, that for interest-free loans given, ICDs given at a concessional rate of interest, I mean at a rate lesser than the rate of interest at which I have borrowed, or given interest-free, we have the benefit of that Supreme Court decision of SA Builders case, wherein it has been stated the moment I establish a business expediency or commercial expediency, then there cannot be a disallowance under section 36(1)(3). Not to, and as Avinash ji has already stated, that 14A is comes into picture only when there is either earning of some exempt income. In absence of an exempt income, 14A का applicability का examination का scope ही नहीं है. That is what I want.
And one more thing, I think the other decision of Reliance Utility, etc., whereby if the investment is made out of the share capital and surplus money, then the question of 14A will not be applicable. That is still there.
That is still there. That is an established principle. So once I prove that my own funds are more than the borrowed funds or funds invested in it,
I think the applicability of this is in the limited case of investments by the companies or by the assessors in the mutual funds, because they might generate some kind of an exempt income. But nowadays, because mutual fund dividends are also taxable and even the sale of mutual funds are also taxable, so the applicability as such have reduced drastically for 14A.
Sir, 14A बहुत dilute हो गया, dividend taxable हो गया, LTCG taxable हो गया. अब 14A का उतना practical role नहीं रहेगा according to.
Yeah. So can we move to the next amendment?
Yes. So next amendment, I will take up section 37, which has been made. In section 37, an explanation 3 has been inserted. Explanation 3 which has been inserted, I will read few lines from the explanation. It says, for the removal of doubts, it is hereby clarified that the expression expenditure incurred by an SSC for any purpose which is an offense or which is prohibited by law in explanation 1 shall include and shall be deemed to have always included some of the expenditure which they are saying in explanation 3 is an for any purpose which is an offense which is prohibited in India or outside India, then to provide any benefit or perquisite to a person, whether or not carrying on business or exercising a profession. And third is to compound an offense under any law for the time being in force in India or outside India. So therefore, the amount of expenditure which was disallowable for violation of any law under the explanation 2, which was already there in the statute book, and there was a sort of debate or dispute that what kind of expenditure can be said to be violated by law, whether fee is if you are paying a say fee, late fee, whether that late fee is for the violation of law and hence it is not allowable, whether suppose if you are in paying compounding fees to SEBI for compounding an offense or to RBI for compounding an offense, whether all those kind of expenditure were for violation of law or not, because fee was interpreted differently. So that has now been set at rest by making this amendment, which was, so to say, was driven by the decision of tribunal, and particularly the decision of Himachal Pradesh High Court in the case of Confederation of Indian Industry versus CBDT, reported in 335 ITR page 368, where the expenditure, where the pharmaceutical companies particularly, when they were paying some benefits and perquisites to doctors, like मान लीजिए उनको foreign ticket दे दिया, उनका और घर में टेलीविजन लगा दिया, उनको एक गाड़ी दे दी, मर्सिडीज गाड़ी दे दी, for promoting the sales, and all these kind of expenditure were being claimed as an expenditure, but they were in violation of the guidelines of Medical Council of India, MCI. So therefore, and subsequently this Himachal Pradesh High Court decision was interpreted that no, by tribunals, that yes, even the council guidelines, if they are violated, so that will not be eligible, it will be disallowed. To take pari materia, say any guideline which is given by Institute of Chartered Accountants of India, will therefore it will become applicable to us, or say Bar Council of India in case of advocates. So any kind of violation which is done, and if that is covered, then that will automatically get covered now under the amendment which has been made in section 37 by inserting the explanation. And moreover, offense in India or outside India, because there are several companies, like you see Satyam Computers case, when Satyam was taken over by Mahindras, Satyam has had to pay huge $125 million, I think, for settling the case in United States for the class action suits, etc., which were filed. So taking cue from that, there can be several other situations. And the compounding fee aspect also, compounding fee is a very big in itself, because generally the corporates and individuals get the offense compounded by making a payment of fee. In the Income Tax Act itself, there is a provision for compounding under section 279. So therefore, all this will now get attracted in section 37. And above all, now when we are doing the tax audit under section 44 AB, where we have to report on this particular aspect, the duty of the auditor will again become huge. That the auditor will be expected to report compliance of this particular provision holistically. So it's a huge amendment, I will say. That's it.
I think आप mute पे sir, please unmute. Yes, sir.
Well, so far as the amendment is concerned, it is also supported by the latest decision of this Honorable Supreme Court in Apex Laboratories case. So, unhone Apex Laboratories mein, they have said that all such kinds of freebies or gifts or benefits given to doctors are hit by even the explanation 1 of section 37. So, therefore, ye to theek hai. Main isme I just want to give one thought which is always disturbing my mind. And in one decision, I have seen that some benefit has been given to the SSE. I'll just read the explanation 3 once again. For the removal of doubts, it is hereby clarified that the expression expenditure incurred by an SSE for any purpose which is an offense or which is prohibited by law. So, what I am trying to submit that the department is bound to establish and prove that the purpose of incurring an illegal expenditure should be an offense or it is not permitted by law. So suppose I am carrying out a business और उस business को carry करने के लिए मेरे को कहीं कोई speed money या कोई ऐसा पैसा देना पड़ता है which is apparently that giving of that money may be tainted with illegality. But the purpose of incurring that expenditure is not illegality. So therefore, so long as the purpose is not illegal, or so long as the purpose is not an offense, and my purpose is to carry on business. आपको याद होगा जब 37(1) का एक्सप्लेनेशन 1 आया था तो उस समय बॉम्बे हाई कोर्ट का कोई हफ्ता मनी का एग्जांपल इन्होंने बजटरी मेमोरेंडम में पुट किया था कि ए रियल एस्टेट बिल्डर if they have to pay some money for removing of these illegal encroachments, speed money, तो वो allowable हुआ था बॉम्बे ट्रिब्यूनल में. उसको नलिफाई करने के लिए अमेंडमेंट आया. But the wordings and language used in both explanation 1 and explanation 3 is that expenditure incurred by an SSE for any purpose which is an offense. That was one aspect. Second aspect is in such situations, ठीक है, कंपनी के हैंड में तो डिसअलाउंस हो जाएगा. अभी एपेक्स लेबोरेटरी भी आ गया, लॉ का अमेंडमेंट भी आ गया. व्हाट अबाउट डॉक्टर्स? उनके हैंड में ये इनकम होगा क्या? सर, अप्लाइंग द प्रोविजंस ऑफ 28 Roman 4, it will be a business because what is this benefit is arising to them in the course of carrying out their profession. Therefore, according to me, 28(4) will be applicable. Another aspect of this is applicability of 194(r) on such benefits or perquisites given to these doctors. ये भी सर जो हमारे 22 में जो amendment आया 194(r) में, that if I provide any benefit or perquisite which is in kind, either wholly in kind or partly in kind and partly in cash, in that situation that 194(r) will also be attracted. So these were some of the further aspects which I thought should be considered and understood by us.
Thank you, sir. In my limited understanding, sir, I have a different view as compared to Gupta ji, what you have. Sir, first of all, we have to see that the definition is not an exhaustive definition. It is an inclusive definition, what they have added. So if it would have been an exhaustive definition, then what you said is about speed money and all, then I would have agreed. But here the explanation says that what the word used in explanation 1 is expenditure incurred by an SSC for any purpose which is an offense or which is prohibited by law. So they have just defined it. So if it would be an exhaustive definition, then it might be possible that any illegal money what an SSC have paid maybe covered in this definition or maybe allowed. But I believe that if we read the explanation in full, then it is an inclusive definition. This says that any expenditure incurred for any purpose, so which is prohibited by a law. So if somebody is giving a speed money, which is prohibited by Corruption Act or any other act, so in my limited understanding, that should not be allowed in future. Second, I think the impact of this amendment is far-reaching. Specifically, if we talk about the transport industry, so every red light, whenever a truck jumps a red light or whatever happened, so the traffic police person used to put a challan of 100 rupees, 500 rupees or 1000 rupees. What is that challan? That challan is nothing but a compounding fee for making good an offense. So all those people or all those assessees where this is a very, very small amount, legal amount, which is being paid to the government as a compounding fee. Many times for making some offense good, in the courts also we are paying some compounding fees. Sir, the smallest fees what everybody used to pay is ROC additional fees. So if I do not file my documents within time limit prescribed, then I used to pay an additional fee. So what is that additional fee? That additional fee is nothing but a compounded fee. So with these amendment, I believe all those things gets disallowed by this 37. And as a tax auditor, it is my honest duty to report this transaction to the income tax department in my tax audit. Otherwise, it will be a negligence on my part. So now what government says, do it everything within the legal framework, and ask your clients also to file everything within time. So that's the spirit of the amendment, what I've said. Other legal cases and other things quoted by both the speakers are already well taken into account. So, but this is an amendment which is a prospective amendment, and we have to deal with it from 1/4/22. What will happen to all these violations that will have happened? And I have just one thought process, that nowadays what happens, that many hospitals are charging money directly from the pharma companies. So I come across few hospitals whereby whenever a patient goes to the hospital, after coming out from the doctor, they used to scan the prescription and send it to the pharma companies stating that we have already prescribed your medicine. So the money is also coming through a proper banking channel to these hospitals. So I do not know whether these money, what is being paid by these pharma companies to these hospitals, under what head, I don't know, but whether they will attract these kinds of provision, which is there, it is in violation of any direction of Medical Council of India, etc. So to my limited understanding, yes, they are also being prohibited by this, and these are not allowed in expenditure in the hands of pharma companies. But time will tell what will happen on this, but the amendment is very clear. So should we move to this next amendment?
Gupta ji, you can take up 79A, sir, I think.
Sir, there is one small amendment of 43B left. So can we take the small amendment of 43B and then we'll move to 79?
Yeah. Now, 43B is this conversion of interest payable into loans or this thing. Already in the 43B of the Act, there are various clauses which prohibits that in case of this, I'm just going by the explanations, which says that when it is when any amounts or funds payable to any banks or financial institutions, if it is not actually repaid, but if it is repaid by if it is converted into a loan or borrowing, then it will not be amounting to actual payment within the meaning of 43B. Now, friends, what has happened, that in the there is a Supreme Court decision reported in Aqua 436 ITR page 582. In that decision, the company had a huge sum of outstanding running into hundreds of crores payable by way of interest to the financial institutions. And by way of a restructuring plan, it was decided that the company will issue a convertible debentures in place of these outstanding interest payable, and the matter that tribunal held in favor of the SSE by saying this will amount to actual payment. When the matter was carried to High Court, the High Court decided against the SSE. Then the matter traveled to Supreme Court, but the Supreme Court endorsed the view of the tribunal by saying that it is a case of restructuring. Both the lender and the borrower, they have agreed that it is an actual payment. So actual payment by issue of the convertible debentures. Now, to nullify the effect of this Supreme Court decision, now they have come out with an amendment in this Finance Act 22 that even even when such outstanding payment of interest, if it is paid, if the liability is extinguished by issue of certain debentures, then it will not amount to actual payment, and that has been nullified. Here also, once again, a question will arise whether it will apply to the earlier assessment years, that is prior to assessment year 23-24. Once again, my submission here also is that it will not apply retrospectively, because the provisions have been made applicable with effect from 1/4/23, assessment year 23-24. So this is now any restructuring will now is likely to be affected by these amended provisions of 43B. So but it has been held, इसमें एक practical problem, कई जगह department एक stand लेता था कि if the interest is debited to your cash credit account, should it be treated as actually paid? But the judicial view is, if it is debited to my cash credit account and if the bank that is within my cash credit limit, or the bank is permitting me to withdraw that amount by in the cash credit account, that should amount to actual payment. That has been the judicial view all along being taken. So that was the amendment relating to 43B.
Can we move further, or do you want to add anything? I think it's a small amendment.
Yeah, no, I don't want to add.
Yeah. So now let's move to 79A, the main amendment.
79A, I think, is fairly clear that when you are declaring any undisclosed income in pursuance of search which has taken place, so you will not now have the luxury of setting off the same against your brought forward losses or depreciation. That is the provisions of section 79A, which has been inserted by saying, notwithstanding anything contained, no set off against such undisclosed income of any loss, whether brought forward or otherwise, or unabsorbed depreciation shall be allowed under any provision of the Act. And then undisclosed income has also been defined in the explanation to this section. So therefore, it is fairly, I think, simple, so to say. Gupta ji, if you can add anything on this side.
Now, the only thing is to be added is that even undisclosed income detected as a result of survey under section 133A, that has also been covered. So that is a very serious thing. Even, I mean, all kinds of survey, excluding only the TDS survey. TDS survey जो 133A within bracket 2A जो होता है, उसको छोड़ के कोई भी survey अगर होता है, तो that will, उसमें अगर कोई भी additional income disclose होती है. Now they are saying what is undisclosed income they have defined. They have said that if the what is detected is, if it is not recorded in the regular books of account maintained by you, that will be treated as undisclosed. Sir, practically in any business and every business, 2-4 दिन के transaction कई बार they are not found recorded in the regular books of account. But they are going to be recorded sooner than later. So that if it is my practice कि हम 2 दिन बाद 1 दिन बाद अगर entry करते हैं, nowhere no law says that every day you must enter the transactions in your day-to-day books of account. So, and in case of a small or medium sized concern where there are no professional accountants employed or employee accountants employed, where the proprietor or the partner themselves maintain the accounts, they take it to Sunday or a holiday or a Saturday and then make the entries of the whole weeks in their books of account. So that is going to create a huge havoc. I mean, the survey having been included, according to me, is a very dangerous thing. So far as search and seizure under 132(4) is concerned, declaration made, undisclosed income declared, that I understand. That the reason is that people take the benefit of undisclosed income not being taxed because of the brought forward losses or losses of the current year or unabsorbed depreciation and all these. But survey का ऐड करना मेरे हिसाब से इसमें एक बहुत dangerous thing है. That will create a big problem according to me.
I agree with Gupta ji, what he said. Normally in case of survey, so whenever a survey party comes and whenever they count the stock is always in excess. So I never come across a case where the stock is in shortage. The stock is always in excess, and generally what the assessee also under the undisclosed income, or what he agrees is that, okay, I have a books of account, my stock is amounting to be, let's say 15 crore, but actually you found it at 17 crore. So I offer this 2 crore as an additional income. So here, my point here is that they said that no set off, whether brought forward or otherwise. So the otherwise thing is question mark. So for example, during that year, if I have a loss other than that, so whether they will not also allow the loss of the same year, or it is only with respect to the previous year losses that they are talking about. So for example, there was a survey during the year 22-23. In 22-23, I have a brought forward loss of, let's say 50 lakh rupees, which is eligible to be set off during this year. And during the year also I have a loss. And during the survey, I have surrendered 2 crore rupees as a disclosed income because of the difference in the valuation of the stock. Now, my question is whether for the brought forward loss, it is not allowed. That is very clear. But if there is a loss during the year itself, what will happen to that is also a question that yes.
Say the expression or otherwise is broad enough, sufficient enough to interpret that even for the current year's other losses, what they have done is they have done it exactly on the lines of 115 BBE. No set off of loss current year or otherwise, or otherwise को आप 45, 3 और 4 से आप compare करिए. Dissolution or otherwise expression has been used, and that otherwise has been narrated by the various courts and tribunals across the country कि किसी फॉर्म में अगर partners को जाता है तो आपका ये attract होगा. तो मेरे हिसाब से or otherwise will attract the current year's losses also. You will not, whatever is declared, whatever is detected as a result of search and survey, तो वो आपको टैक्स देना पड़ेगा, उसमें कोई सेट ऑफ या बेनिफिट नहीं मिलेगा. दैट इज द स्पिरिट ऑफ द सेक्शन अकॉर्डिंग टू मी.
So I also believe the same. But yes, it was I agree with Gupta ji that including survey is a big question, and this should not be done. So with this, sir, we end up on the business chapter, and we have, sir, 4 important parts to be dealt with, and we have only 1.5 hours left. We have already completed 1.5 hours, so we need to cover virtual digital asset. We need to cover updated return. We need to cover most important part, which is the assessment, reassessments, and the time limitation which have been increased. So sir, as per, and then there are other few amendments with respect to trust, which is also very, very important. So sir, if you allow, can we move? Can we take these 4 first and then move to others?
Yeah, take these 4 first.
Yeah. So sir, let us start with the updated return under section 139(8)(a), moving to the assessment and reassessment, and then we'll take virtual digital asset, and TDS is also very important part. So the amendment in TDS also we need to take that. So let's move to this, sir, updated return. So there are a few questions which are there in our chat box. So I believe we will take it at the end. Now let us continue and close these issues first. So 139(8)(a) is this updated return. Anybody, Patodia ji or Gupta ji, if you want to take.
Gupta ji, you would like to take?
ले लेंगे. Well, updated return. Let us first understand the current position. Sir, 139(1), 31 July, non-tax audit and non-company assessees. Company assessees or audit cases 30th of October, transfer pricing cases 30th of November. Now, to revise these returns or for the belated returns, the time is 3 months before the end of the relevant assessment year, that is 31st of December. तो जुलाई वाले को 5 महीना मिलता है, अक्टूबर वाले को 2 महीना मिलता है और ट्रांसफर प्राइसिंग को 1 महीना मिलता है. The idea of the government was this time to revise or time to file belated returns is too less. Therefore, let us have one more window open. Particularly settlement commission चला गया आपका और तो इसलिए हम इसको एक विंडो और देते हैं. That window they have provided in the form of 139(8)(a) कि within 2 years from the end of the relevant assessment year, if you want, you can come out with a updated return as per the provisions of section 139(8)(a). Now 139(8)(a) क्या बोलता है कि आप कहाँ 139(8)(a) को यूटिलाइज नहीं कर सकते हैं. What are the there are 3 proviso in section 139(8)(a) which says what returns, what circumstances you cannot take the recourse to 139(8)(a). 139(8)(a) shall not apply if the updated return is a loss return or has the effect of reducing the total tax liability on the basis of 139(1), 4 or 5, or results in refund or increases the refund due. In these circumstances, you cannot resort to 139(8)(a). Then second proviso says that updated return cannot be filed if search and requisition proceedings are initiated, 132 or 132(a) proceedings. Survey has been conducted except TDS survey, 133(a)(2)(a) को छोड़ के अगर कोई भी सर्वे हुआ है तो उस केस में भी आपका अपडेटेड रिटर्न में नहीं जा सकते हैं. If there is a notice to the SSE that if any asset seized in the case of other person in a search conducted under 132, if it belongs to you, in that situation you cannot come under 139(8)(a). And similarly, in similar search, if there are certain incriminating documents or books of accounts which relate to you or pertain to you by way of information or documents, वहां भी आप 139(8)(a) में नहीं जा सकते हैं. Now, this provision, as it was originally proposed in the finance bill, was for the year of search or acquisition of survey and any 2 preceding assessment year. लेकिन अभी जो फाइनेंस एक्ट 22 जब पास हुआ है, now this any 2 preceding financial years, they have said आप किसी भी preceding financial year का आप in case of a search or survey you cannot come under 139(8)(a) for the year of search and for any preceding financial year. So 2 की लिमिट अब खत्म हो गई है यहाँ से. Now another question which may arise, that if I have filed my 139(8)(a) for one particular assessment year, can I again come under 139(8)(a)? The reply is no. Once you have opted for 139(8)(a) for a particular year, for that year you cannot come. But for other years, you are always free or welcome to take recourse to 139(8)(a). And similarly, you cannot resort to 139(8)(a) if there are any proceedings for assessment or reassessment or recomputation or revision is pending in your case, like 143(2), 147, 148, 263 or 154. If those proceedings are pending for you in your case, then you cannot come to cannot take recourse to 139(8)(a) for those years. Or such cases are completed under these provisions. तो उस साल का आप 139(8)(a) में नहीं आ सकते हो. Then if the assessing officer has information of such person under several legislations like PMLA Act, Black Money Act, Benami Act, or Smugglers and Foreign Exchange Act for the relevant assessment year for the SSE, so that is also a bar for the SSE to take recourse to 139(8)(a). But the only condition is that if such information is communicated to the SSE before filing of return under section 139(8)(a). Suppose I have furnished my return and thereafter if the assessing officer comes out with certain information, that is not a bar. If he has already communicated, thereafter I am debarred from going to his. Then another bar is that if information is received under an agreement under section 90 or 90(A), that is this double taxation avoidance agreement or exchange of information agreement with foreign countries if there are adverse or incriminating information against the SSE. And such information is communicated to the SSE, that is most important, prior to the date of furnishing of 139(8)(a). Then prosecution initiated before filing of return, अगर है तो भी हम नहीं जा सकते हैं. Or government has reserved a category that you are a person or you belong to a class of person which is either notified or going to be notified by the government. So then what is to be done? That this updated return has to be furnished by making payment of tax as is stipulated in section 140(B). Sir, I am not going into the details of 140(B) कि कैसे 140(B) compute करेंगे. Whatever prepaid taxes are there, they have to be reduced in case of a person who is a non-filer, or in case of a person who has filed the return, even the taxes paid under 140 capital A have also to be reduced in addition to the other prepaid taxes. Now, a major question is, what is the amount of additional tax which you need to pay for the purposes of 139(8)(a)? See, they have said that you can furnish 139(8)(a) within 24 months from the end of the relevant assessment year. So they have divided it into two apartments. One is, if you furnish the return within 12 months from the end of the relevant assessment year, then the additional tax is 25% of the tax and interest due on the additional income which is coming under 139(8)(a). But if it is filed within 24 months, that is after 12 months, but within 24 months, then the additional tax and interest become 50%. Sir, इसमें एक जो चीज है, some people were calling that, is it a voluntary disclosure scheme? Certainly not. It is going to remain in the statute book. It is you can apply it year after year for different assessment years. अब एक क्वेश्चन और अभी हमारे पास आया था. One SSE came to us and they said, sir, हमने इस साल का रिटर्न नहीं फाइल किया है, जिसमें हमारा 2 करोड़ रुपए का अभी इनकम है, और there are some taxes also, but we have not been communicated or received any communication from the department till date. Then they said, sir, if we write to the income tax department that we have not been able to furnish it, one time for 139(4) and 139(5) is already expired, so we are not able to file a belated or late revised return. So क्योंकि हमने return file ही नहीं किया उस साल का. So their question was, sir, post 1/4/22, can the department say that no, you have to come under 139(8)(a) by making an extra payment of 25% or 50% as the case may be? My understanding and submission and reply in this case was, no, it is an option given to an SSE. I am not obliged to come under 139(8)(a) mandatorily. I said, they said, sir, हमको 50% एक्स्ट्रा देना पड़ेगा अगर हम 24 महीने में जा रहे हैं, 12 महीने के बाद अगर जा रहे हैं 139(8)(a) में. I said, you better write to them that time for 139(4) and 139(5) is no more there. Therefore, we request you to issue a 148 notice read with 148(a). So the 139(8)(a) is not mandatory. So one will have to take a call by going into the facts and circumstances of each case to say whether they should take advantage of this 139(8)(a) return. And mind you, only when some tax is payable, only when some additional income is offered, that 139(8)(a) can be taken recourse to. That is the small submission I wanted to make. I think some issues or questions, if they are there, then it would lead to a better discussion.
If you want to add anything, then we have 3 questions which are there.
No, the only thing I want to add is, Gupta ji, also your views that this 12 months or 24 months and 25% and 50% additional tax which you are liable to pay. So therefore, even for one day or 365 days, the amount remains the same, 25%.
Yes. That is there, sir. Nothing doing in this.
Sir, I just want to add, sir, Patodia ji, it is not 365 days. It is more than 365 days. So, for example, sir, for the assessment year 22-23, the last day of filing a revised return or a belated return is 31st December 2022 itself. Even if I file a return on 1st January 23, which is within the assessment year for the assessment year 22-23, then also I am liable to pay this 25%.
Yes. So basically, it's not based on any time period. It is based on the window of 12 months. So somehow it could have been made based on the time period. Otherwise, it's a very huge amount, so to say. And moreover,
Sir,
moreover, they have also made this that interest under 234B will be recalculated. That is also an honor.
Sir, all interest and all late fee for filing the return, everything has to be paid. 234A, B, C, everything has to be paid. They have not spared you. On the contrary, in addition to tax, fees and interest, you need to pay this 25% and 50%. आपको interest का भी 25 और 50% extra देना पड़ेगा. In the facts of the case I said till date the department has not given us any communication. There is no finding by the department की कोई उनकी notice या information है. I mean, let us go into the 148 route where we can successfully argue that it is nothing but a voluntary compliance from our end, wherein we are making the payment of taxes and interest due. So we are able to find out even for penal consequences. So one will have to take a call depending on facts and circumstances. Sir, क्या queries हैं आप बताइए?
So there are a couple of queries, which is there. One query that we have received is whether the credit of taxes paid under section 140A, which is I think self-assessment tax, will be given under 140B, which is the tax paid. So I think they have asked about
it is given.
It is allowed.
That means this case is for a person who has already furnished his return. So
Yes.
उनको उसमें specifically लिखा हुआ है कि आपको 140A subsection 1 का जो tax paid है उसका मिलेगा credit आपको.
Next question is Naveen ji is asking from which assessment year this 139(8)A will be applicable?
Sir, it is applicable from 1422. अभी हम आज के दिन हम अगर assessment year 2021 का return देना चाहें तो हम इसमें जा सकते हैं.
Can we file updated return for assessment year 2021? I think you have already answered yes.
Yes. Unless and until we are falling within the exclusions.
Yeah. I think these are all queries that we have. Many people want to know for 2021. Yes, we can go for 2021. I just need to add 2-3 points to it. First point is, as mentioned by sir, that there are certain prohibition to file then updated return, and one of the prohibition is that updated return cannot be return of loss. So meaning thereby, if any SSC have either filed 139(1), 139(3) or 139(5) return, which is of a loss return, and they want to reduce the loss, and the net result of after reduction is also a loss. So that is not possible. You cannot file that loss return. But however, if you convert your loss into an income, or maybe the loss becomes zero. So for example, there is an SSC who have filed a loss return amounting to 25 lakhs, and they want to offer an income of 25 lakhs itself. So the loss becomes zero, or maybe 25 lakh 1 rupee. The loss becomes an income return. Then yes, they have also clarified while passing the amendments. In those cases where the loss ultimately results into either a nil income or it will result into a net income, that return can be filed. So they have made an amendment under 139(3) itself, whereby they said that updated return, which is of not a loss return, cannot be classified as 139(3) loss return. So this is an important part what one can see. Another part what sir have said about 148 route vis-a-vis of 139(8) route. Whether it is a voluntary disclosure scheme or not, I also believe that it is not a voluntary disclosure scheme. However, it is a via media to avoid 148, because another prohibition is that we cannot file an updated return when there is an assessment, reassessment, or recomputation proceedings have started. But what happens when I receive a notice under section 148A stating the reasons that why your case should not be reopened under section 148A? 148, why the notice should not be issued under 148? So in those cases, if I believe, or if any SSC believes that whatever is the reason stated in that 148A notice is correct, then they may like to go for updated return in those cases, provided the time permits to do so. then in those cases, they may immediately go for 139A updated return. And while replying this 148A notice itself, they will say that yes, we have accepted, we have already filed an updated return, hence proceeding under section 148A may be dropped. So that's an easy route that we can go for it. We come across many cases of salaried employees specifically. The notices what we have received this time also, whereby the salaried employee used to file his returns only based on Form 16, but there are certain interest amount which is there. And nowadays we have come across cases where the dividends are there, and few of them are also having a capital gain income, maybe a capital gain loss he is having during that particular assessment year. But if it is not reported in the ITR, so a notice will come in future for 148A. So in all those cases, even for giving this information in the return of income will help. One more use we can do it, Gupta ji, which I found in one of the cases with relation to the Black Money Act. So in Black Money Act, the law of 139.88 does not say that there has to be an increase in the income. So even if I file an updated return with the same amount of income, this is also an acceptable proposition. So in those cases, if let's say an SSC is there who forgot to file his foreign assets in its return of income, and under the Black Money Act, there was a provision that if you do not disclose your foreign assets in your return of income, and you being the resident and ordinary resident, then you are liable for prosecution under the Black Money Act. So this provision can be used in those cases where if there was some information which is there, or there was some proceeding which is pending, which is do not classify to be an assessment or reassessment proceeding, or the information should not be under the Exchange of Information Act, which is a prohibition there. In other cases, if there was a case, then yes, in those cases we can use these information and we can file an updated return by disclosing the foreign assets schedule in the ITR, and it is a good way of doing it. As suggested by Gupta ji, in all cases we have to take out that what would be the liability under the 148A normal course and what would be the liability under 139A. Plus, but always believe that in 148 there was a chances of penalty also. So what the AO will do, whether it will take it under a under-reporting or it will classify it as a misreporting. If it is an under-reporting, then yes, 50% penalty can be levied. But if you pay the tax within 30 days, then you can apply for exemption. So practically in an under-reporting case, no penalty is leviable if you pay the tax without an appeal within 30 days. So then it has to be computed. But if it is a case of a misreporting, then yes, if you go for a 148A proceeding and the assessing officer classifies the particular income as a misreporting income, then in those cases an additional liability of 100% penalty would be there, and then you go in appeal and say that you yourself have disclosed it, you yourself have asked the department to issue 148, etc. So all those kinds of arguments will be there in the case of the SSC. So it is a more of a fact-driven case whether we should go for a 148 route or under 139.80 route. I personally believe for a smaller SSCs, for SME SSCs, 139.80 is a better route, because it's simply you pay 25% or 50% of the additional tax and matter is over. However, if you go for a 148, then yes, there may be prone to litigation in future. For calculation of additional tax, I believe those cases where TDS have already been deducted at source, or there is some foreign tax credit which is already available, then it is always better that we go for this 139.80 route, because while computing the additional tax, all benefits of the self-assessment tax, advance tax, TTS, TCS, even MAT credit have already been incorporated. Foreign tax credit benefit is also been incorporated in this. AMT credit is also incorporated. So at the end of the day, what is being left to be paid is only the net amount, which is after all these amounts. If somebody have already deducted 10% TDS on 194J or so something, or maybe interest 10% is payable, and assuming the person is in 30% bracket, then it is only 20%, and interest on also 20%, whether it is 234A, B or C, whatever is the case may be, these will be applicable, and then aggregated and then compute 25% or 50%. So on case-to-case basis, one can apply this provision. But again, I believe good provision which have been incorporated to settle the unnecessary litigation and unnecessary dispute. So one can always see and check it. Now, I think, sir, let us move to a reassessment proceeding. I think there is one more question have come on this. If there is the income tax refund, we cannot file IT return under Section 8A, absolutely correct. But there is a provision in IT that we can apply for condonation of delay to commissioner. Is it still valid? Yes, sir. It is not only commissioner. That ranges between the amount and various. That circular of board is there. In few cases, we have to apply to the board. So that exemption or condonation of delay under Section 119 is still there. So that procedure will still remain, but only for claiming refund, not in all other cases that is permissible. So those conditions or those provisions under 119 is still there. So, sir, can we move to 148?
Yes.
And reassessment, because there is few drastic changes that they have made.
Yeah, so 148, let us discuss 148, I will say, is the flavor of the season. Because in the last week of March, I think department has issued 148A notices. Maybe innumerable notices have been issued under Section 148A. And going by the scheme of the provisions of reassessment which were there in the statute book until the present law, they are taking a complete U-turn, I will say, in the manner in which the notices are being issued. Because if you see the sample notice which is issued under Section 148A, subclause B, there what they are doing, they are saying that we have information, and in the annexure they are giving information that you have made bogus purchases, and therefore it is liable to be added as undisclosed income. And on that they are seeking your reply. And in arbitrarily, though Section 148A prescribes for minimum 7 days time to be given, but people have been given notice dated 25th of March for responding by 31st March. That is mandatory 7 days time has also not been given, which is required as per the law. Therefore, apparently on the face of it, the notice is ultra vires and it cannot be proceeded with. And to add to the worry, the way the present amendments have been made, I think the government, in order to not to be criticized at a time, they have diluted the provisions at first last year, and now they have done this second tranche of dilution in this year, as I see it. Because if you see in Section 148, the first amendment which has been made is that they have added one proviso after the proviso that provided further that no such approval shall be required where the AO with the prior approval of the specified authority has passed an order under Section 148A subclause D to the effect that it is a fit case to issue a notice under this section. So this so far so good, that if already an order under Section 148A subclause D has been passed, and that too with the approval of the specified authority, and therefore again seeking approval of the specified authority under Section 148 while issuing the notice, it can be said to be a duplication of work, because in any case there cannot be a situation where the specified authority has already approved the order under Section 148 subclause D, and then it will say that no, don't issue the notice under Section 148, which was an impossibility. So this amendment, I think, it is in the right direction by insertion of the proviso there. So therefore, no approval required if no order has already been passed under Section 148A subclause D. Now, the amendment which has been made, drastic amendment, is in explanation 1 to Section 148. Explanation 1, where the last year when the amendment was made, it read that for the purposes of this section and Section 148A, the information with the assessing officer which suggests that income chargeable to tax has escaped assessment means. What is the meaning of information? And subclause 1, Roman 1 said any information flagged in the case of the SSC for the relevant assessment year in accordance with the risk management strategy formulated by the board from time to time. Now, last year, everybody was gasping for help that what is this risk management strategy and how the strategy will be formulated by the board. Nobody knows it. Now, there was a word information flagged. So this year, they have said that the word flagged will be omitted. So what does it mean? I take it in this manner that flagging of information is something done by the machine. Flagging of information apparently means it is the electronic flagging, where the system of the department say, I have been told that in your profile, when you visit the income tax window, the window of your profile which is available with the department, when they open your profile, in those cases where there is some information, it will be displayed in red. So therefore they know that the information has been flagged, and thereafter they can proceed with. Now they are saying that flagging word has been removed. When you correlate this removal of flagged with the present notices which are being issued under section 148A subclause B, where they are saying that I have the information without giving you the information. They are not parting with the information. They are saying we have the information. So it amounts to a huge power to the officer to move when flagged word has also been removed. Second, in subclause 2 also, they have made far-reaching amendment. What they have made in subclause 2, the word was final objection of the CAG. Final objection raised by the Comptroller and Auditor General of India to the effect that the assessment in the case of the SSC has not been made in accordance with the Act. Now, all of us know the decision of Indian Express and Newspaper Society 119 ITR page 996 Supreme Court, where Supreme Court held that there cannot be any reassessment on a point of audit objection. Audit party cannot interpret the law. Though there was the decision of PBS Bidis in 237 ITR, where the Supreme Court said that the audit objection on a point of fact can be subject matter of reassessment, but audit objection on a point of law in 119 ITR is still followed in respect of old notices. However, now they have removed the word final from the audit objection. So now it reads, any audit objection to the effect that the assessment has not been made in accordance with the provisions of the Act. Now all of us know, after the assessment is done, audit party will invariably take over. I'm talking of the physical mode. Audit CAG auditors and other auditors used to come and they used to call for the explanation. However, now simply an audit objection coming can be a information which suggests that income chargeable to tax has escaped assessment. Though you will be given an opportunity to explain, but I have found that the opportunity is only an empty formality, so to say, because opportunity is not effective opportunity which is required to be given in the eyes of the law. By simply saying that you explain, and even though you have responded to the notices under section 148A subclause B which has been issued to you, and you submit your reply, and after 2 days you receive the notice under section 148 of the Income Tax Act. This is what is practically happening. So the only now you have the only option of either approaching the writ court, which will be very difficult in the light of the new provisions, which was easier under the earlier law. So this is another amendment which has been made. Then they said any information received.
Patodia, because there are a lot of amendments in 148A. So
Yes,
let us
yes.
discuss one by one, because you have already taken two important amendments and they have a far-reaching impact. So let us
Okay.
first discuss these two and then we move to the next.
Yes, yes, right, sir. Right, very right, very right. Yes, sir. Yes, let us.
Yeah, Gupta ji,
Yes, yes.
Gupta
So
ji,
any-
बताइए sir.
anything you want to add on this flagged issue or the audit objection or the earlier amendment?
नहीं, देखिए ऑडिट ऑब्जेक्शन में एज राइटली सेड कि लीगल ऑडिट ऑब्जेक्शन विल वाज यूज्ड टू बी कंसीडर्ड नॉट एन इंफॉर्मेशन, बट अभी इट इज एनी ऑब्जेक्शन, सो द impact of this 237 ITR and 119 ITR is no more there. और एक जो बहुत मेजर अमेंडमेंट इसमें जो हुआ है वो इनने बोला कि इन केस ऑफ सर्च एंड सर्वे एक्शंस it is deemed that AO has information for the year of search and 2 preceding assessment years. Now these 2 preceding years is also done away with. Now that means this will be taken up to 10 है जो पूरा 10 साल का लिमिट है वहां तक के लिए it will be deemed. So that is a very dangerous amendment according to me. और इसमें सबसे बड़ी प्रॉब्लम यहाँ पर जो है मेरे हिसाब से, एज आई ऑलरेडी नरेटेड, कि आज एक सर्वे होगा अदर देन TDS सर्वे, तो उसमें हम इनको ये प्रिज्यूम हो जाएगा दैट इट इज ए केस ऑफ इंफॉर्मेशन सजेस्टिंग एस्केपमेंट ऑफ इनकम फॉर द प्रीसीडिंग 10 असेसमेंट ईयर्स. दैट इज एब्सर्ड अकॉर्डिंग टू मी, दैट इज डेंजरस अकॉर्डिंग टू मी. एक छोटा सा सर्वे करके आप पिछले 10 साल का मेरे को इसमें शो कॉज इश्यू करने में आ जाएंगे. अब मैं जाके वहां एक्सप्लेन करूं 148A में कि मेरा केस तो कोई एस्केपमेंट नहीं है, ये नहीं है. आई मीन enough prosperity for advocates and chartered accountants, but for the poor SSC it is a very very. अभी जो पाटोदिया जी ने बताया, इन्होंने तो बोला कि 7 days में 5 दिन का टाइम मिला इसलिए it is illegal void ab initio. सर यहाँ तो my people have received the notice of 148A today and it says you file by tomorrow. अरे बाबा 7 दिन तो एक्ट बोलता है, तुम हमको आज नोटिस दे रहे हो, कल हमको रिप्लाई देने को बोल रहे हो. तो these are, I mean, there is no accountability on the part of the revenue officers. I think a very strong representation should be made on this account, that at least they should also have some responsibility or accountability. अब 293 को पढ़िए इनकम टैक्स एक्ट में, उसमें ब्लैंकेट एग्जेम्पशन दे रखा है. Any act done, any deed done by these revenue officers in good faith. Good faith का खाली एक वर्ड है. गुड फेथ तो वो बोलेंगे हम तो गवर्नमेंट के इंटरेस्ट में, रेवेन्यू के इंटरेस्ट में काम कर रहे हैं. और आई मीन आई हैव प्रैक्टिकल एक्सपीरियंस ऑफ लूजिंग केसेस इन बॉम्बे हाई कोर्ट where the department has taken a shelter of 293 and got away with. So that is there, sir. और प्रायर अप्रूवल का ठीक है इन्होंने किया, वो उनके इंटरेस्ट में है. जो पहले उनको 4 बार प्रायर अप्रूवल लेना पड़ता था वो अभी 1 बार, एंड दैट इज अंडरस्टूड आल्सो as an SSC, as a SSC side, we do not have any objection to that. और ये 149(1)A का जो है ये स्कोप इन्होंने बहुत बढ़ा दिया है. पहले था कि the escapement of income must be represented by assets. Now it is not only represented by assets, it has been increased tremendously. Even if amounts which have been spent, consumed, expenditure in respect of a transaction or in relation to an event or occasion. घर में कोई 8 साल पहले कोई शादी हुई है, उसमें कोई खर्चा लगा है, उसका कोई एविडेंस मिल गया, वो भी स्टेटमेंट में आ जाएगा. Any entry or entries in books of account, now all these share capital raised or bogus expenditure found or fabricated जो भी है, तो scope has been endlessly increased. जो पहले उन्होंने, see, the object of reducing it to 3 years, the object of bringing the fact that it must be represented by an asset was to take out unnecessary and small cases out of the whole thing. But now that is done away with. Now for anything, and they will say that this is nothing but escapement of income. आपका कोई भी एंट्री को चैलेंज कर देंगे, तो where is the sanctity, sir? वो 106 ITR में जो है, where is the finality? When do I feel that yes, my examination from the department is going to be over? So that according to me, 148 को बहुत, I mean, they have made it endless according to me. Anything and everything can suggest, will become an information suggesting escapement of income, which is the basic thing required for issue of this 148A notice.
Patodia ji?
Another important amendment which has been made, backdoor amendment, I will say, that in the earlier years, while survey is covered as a ground for deemed escapement of income, if any income is found as a result of survey under section 133A, only 2 exceptions were provided last year. Exceptions in subclause 2A and exceptions in subclause 5.
Yeah.
Subclause 5 dealt with survey
Even
in connection with any function, ceremony or event. The income tax authority is of the opinion that he may at any time after such function. So basically कोई शादी ब्याह में कोई आपका event हुआ उससे related survey है, तो that was not covered within the deeming fiction under the earlier amendment. But now they have removed that subclause 5 from the power to assume deeming escapement in that provision, which is also a very huge amendment, I will say. And now it appears that there is no sanctity of the assessment under section 143(3) which is done, because assessing officer now can be said to have a luxury of issuing notice any number of times under section 148A, simply by saying that I have the information which suggests that income chargeable to tax has escaped assessment. But in my submission, definitely these kind of notices will be subject matter of challenge. Of course, it is not within the ambit and scope of small assessees to challenge the notice like this. But obviously, definitely the big corporates will challenge such notices, and the court will pronounce that information which suggests cannot be based on your simple statement. There has to be some material from which it is discernible from the notice itself, or the law also provides that as a result of inquiry, if conducted. Now they are saying that inquiry need not be compulsory in all cases. I may not conduct inquiry. If that be the case, then your information must be so clear, loud and clear, that one should be able to say that actually the income has escaped assessment. But what they are saying you have made bogus purchases from XYZ, and therefore your income is chargeable to tax as escaped assessment. How it is bogus purchase? How information you have, what information you have, how you have arrived at this understanding? Hindustan Livers case 268 ITR Bombay High Court had said in the context of earlier law that there has to be a live link between the regions recorded in writing and the reassessment. The assessing officer under the context of previous law was not allowed to even add a single word to the regions which were recorded. He cannot add or subtract the word. The notices were supposed to be justified on the basis of the reasons which were recorded. So in my opinion, definitely these 148A notices which are now being issued, they will be subject matter of challenge, and the department cannot assume such wide power of reassessment. Reassessment, revision under section 263, what not, you have all the powers, and that too for a period of 10 years in such blanket manner. The reassessment provisions are now becoming what to say, use. I think there will be a multifarious litigation on reassessment law, in my opinion. That's all.
I think very, very widely covered by both the speakers. Just few points I think which have left less of importance. My view is why the word flagged have been removed. So earlier, as per my discussion with the department officer, so flagged word means that the department system used to send this information to the AO, and the information is flagged in their system saying that these are the notices for which you need to issue 148A or 148 as the case may be. However, with the assessing officer, there are few complaints, there are few other information which is directly available with the AO. In those cases, the information is there in the system, but it was not flagged by the backend system. So that is why they have removed the word flag. So if For example, there is a complaint which have been received by the AO, or during some other proceeding, he come across with certain information which is already there in that part of that risk management strategy. And when they open this risk management strategy, the information is there, which is not flagged. Even in those cases, they are covered. So that's why they have removed the word flagged as per the my discussion with the department. The second, which is a detrimental amendment, is with respect to the CAG objection. We know that department is under so many audits. So one is the IAP, which is their internal audit. So this is being done by their internal people only. So earlier they said that anything which is being pointed out by CAG as a revenue leakage during the assessment, only those cases are covered here. And again, as pointed out by Gupta ji also, that these cases may be on account of factual part, these may be on account of legal part. And for the legal part, the judgment of that newspaper society still holds good. But only the CAG which has to do, and AO is under multiple audit system nowadays in the department. So making it an any audit objection is something which I believe is not good, because now, and if somebody wants to go for and benefit this provision, they may say their internal audit department, okay, you raise this audit objection, and then they can misuse this particular part. It is there. The three more important things what have been added here, which I think have skipped here, is one is any exchange of information which have been received. So that is also covered. So all these kinds of Panama leaks, the HSBC bank account, the Swiss bank account, or there are an automatic exchange of information which nowadays is being received from US, from other countries, whereby the information is pushed back to the system automatically. So in those cases also, though the period of limitation is 14 years in those cases, provided the source of income is outside India, then in those cases also that exception have been provided here, that these are also subject matter of 148 here. Second, the third thing what they have included is under the faceless regime. So they have come up with a new provision of 135A. So if anything which the AO have gathered under that scheme, so there are AIS, there are annual information statement to be filed, there are other documents to be filed under this 135A. If anything which have been come up under that scheme of 135A, that is also now the scope have been increased for that 135A also. And last, they have said that on account of any order of any tribunal or a court, not in the case of SSC, but in any other case, in any case. So if there was, let's say, a judgment which have come on some part from a court, and that is in favor of revenue, and he want to do a 148 in those cases, earlier they do not have a power. Now the power has been given to them that they can also go for this 148 route for implementing that revenue favor judgments from a tribunal or a court. So these are three things which have been left. So there are three important amendments which have been made in the assessment as well as reassessment proceedings. So these are procedural amendments. Why these amendments have been made in here is because for the faceless penalty as well as faceless appeal, these are run by notification, and they can simply amend the notification. However, for the assessment and reassessment, that have already been incorporated in the law. And if they want to make any amendment in that particular part, they have to amend the law. And now they have amended the law for faceless assessment and reassessment procedure. So what are these three important amendments what they have made in this faceless assessment and reassessment scheme? The first amendment what they have made is, in the faceless assessment, there is a unit called review unit. So the review unit will review the orders of the AO, and they can suggest the changes. Earlier, whatever review unit used to say, these are binding on the assessing officer. The assessment unit has to incorporate those things in while framing the draft order, or we can say that draft order goes to a review unit makes the suggestion, then the assessment unit has to revise the draft order and pass, and these suggestions are mandatory. Now they have made it amended, and these suggestions made by the review unit is not binding, is not mandatory. So the review unit will review the order, send it back to the assessment unit. Assessment unit will consider those suggestions, and if they believe that these are not binding, these are not up to the mark, or these do not hold good, then they may go for it by recording the reasons for the same. So they are not binding. This is one favorable amendment which have been made by this Finance Act 2022. The second amendment what they have made, which is in line with the court order of opportunity of being heard to be given to the SSC. So in the faceless appeal proceedings, the opportunity of virtual hearing have already been incorporated, and there are many case laws which have come recently. The writ petitions where the opportunity of being heard is not given. Nowadays, the virtual hearings have been given, but it was not part of the act. Now they have amended the law, and they have said that during the assessment and reassessment, there is a virtual hearing to be given. However, the law says for providing the virtual hearing, it has to be after the show cause notice and with the approval of the Chief Commissioner of the National Face Test. So that approval part of the Chief Commissioner has been done away with. So now with this amendment, anytime during any time of the proceeding, a virtual hearing can be provided to the assessee, and there is no need, only after the show cause notice, this virtual hearing is to be provided, but no approval of the Chief Commissioner is required for providing this virtual hearing. That is also a welcome amendment which has been there. The third amendment which have been made for the assessment and reassessment part is with respect to the special audit provision. So during this faceless assessment, we are continuously asking the department that what will happen to a case where the assessment unit or the assessing officer wants to get the accounts audited by an auditor appointed under 142(2)(a), which is a special audit. So how this will be done, whether it will be done by the assessment unit, whether it will be done by the National Faceless Assessment Center, or it will be done by the jurisdictional AO. Now they have amended this provision, and they said that if the assessment unit believes or AO believes that these accounts has to be audited by a special auditor under 142(2)(a), then the case will be referred back to the jurisdictional assessing officer for getting the 142(2)(a done by an auditor upon empaneled by the principal chief commissioner of that particular jurisdiction. So these three important changes which have been made with respect to the assessment and reassessment part, which I think it's worth noting here. Apart from that, I think most of the provisions have already been incorporated. There is one more thing which is left, is about the time limitation. So time limitation for completion of the assessment for a particular assessment year, which is assessment year 2021, which was provided in the law for 12 months from the end of the assessment year, which was already expired on 31st March 2022, have been extended by 6 months time. Now, for all the assessment orders for assessment year 2021, the due date of passing the order under section 143(3) have been extended to 30th September 2022. Sir, any critical comments on this particular amendment for extension of time limit? So, Gupta ji or Patodia ji, anything on this?
No, sir. It's okay.
No.
Sir, I have a reservation here. I think somebody should go to the court and they say that they have not done their part of the duty on time and they have just extended. when the SSC have not complied within the time, then they have a huge penalties, etc. And we all talked about 293 and all. But yes, it is there.
Sir, that continues to be there. A policy decision has to be taken, which is lacking according to me.
Sir, one interesting issue have come up in many of our cases, that there was, which I want to tell to others also, that the extension of 6 months is only in case of 143(3) assessment for the assessment year 2021. It was not in case of 148 assessment. And in my case and many of my colleagues have not received the orders under section 148 till 31st March 2022. So whether you find any backdoor amendment for that also,
in such a situation, the department will say even 148 assessments are assessments 148 read with 143(3). So therefore, they will say that is also an assessment under 143(3).
But sir, it is only with respect to an assessment year 2021 only. So these 148 cases is not for the assessment year 2020-21.
That is a point. I mean, there I agree with what you say. There I agree.
So because there are many cases, sir, and many of our professional colleagues are calling me and say, sir, हमारा 148 का order नहीं आया, कहीं कोई backdoor amendment तो नहीं है जहाँ पे 148 का भी time limit extend कर दिया 6 महीने का. So.
No, but I think the order need not be communicated to you within 31st March. They will say we can communicate to you after 31st March also. If the order is passed, DIN number is there. Those kind of examples they will give actually.
But I think these are all subject matter of legal dispute, because nowadays everything needs to be done digitally. So you cannot apply a digital signature in the back date. So,
no, you cannot do backdating, of course. But then they will say that, okay, we have passed the order, but service has been done. No, one more thing, what they are doing, I have found in one of my cases that the order was passed on 23rd March. And next day they have communicated the DIN number for that order next day.
So, sir, I think for that I just draw your kind attention on the Allahabad High Court order. It was not reported yet. It was 2 weeks ago that the order have been issued by quashing the notices under section 148 issued dated 31st March 21, received by the SSC on 1st of April, where they have taken the cognizance of the Information Technology Act. Now, section 13 of that act, the court have very beautifully clarified that a service of notice will be deemed at a point where the assessing officer have no control about the same. So what the department have argued is that we have generated the DIN on 31st March and we have done it. Then after generating of DIN, everything is done by the system. However, in real sense, generation of DIN is one process and sending the notices is the another process. So that the court have held that merely generating the DIN does not amount to service. So you are generated.
In one of the cases, sir, the facts are that it is the 148 notice is dated 31st of March. But it has left the office of the concerned IT on 16th of April. तो हमने उसमें यही स्टैंड लिया है कि a mail which is being generated from your office is dated 16th of April from the same email ID that 148 notice is coming. Same email ID you are communicating it to me, and we are fighting it strongly and legally on that basis. जो आपने इलाहाबाद बोला exactly on same basis पे है. Merely keeping the notice ready on 31st and issuing it from your office on a date later than that will amount to be a violation. अभी Calcutta High Court ने भी इसके basis पे accept करी है.
Yes, sir. In Delhi also there are about 300 cases which is made in a bunch, and Honorable Delhi High Court on 21st of March they have stayed all those proceedings as well. So we are waiting for an favorable order or from the Delhi High Court also, whether they will quash it or they will allow it.
One small thing I would like to add, though it may not be relating to budgetary amendments on 148, but 148 में बहुत बड़ा question जो लोगों को दिमाग में जा रहा है कि everybody is going into writ proceedings for notices issued on or after 1st of April under the old provision by not following 148A. तो सब लोग बोल रहे हैं कि आपको हाई कोर्ट में जाना चाहिए. According to me, sir, the original stay orders were issued in those cases by Bombay, Allahabad, Calcutta, and other high courts. Now those high courts have passed final orders in those cases, wherein they have laid down the principles also. If those notifications of that 20 number notification and 38 notification cannot have the power to extend the legality of 148A and new provisions and all this. So abhi, after these rendition of those decisions on merit in those cases, according to me, they will have a legal binding effect. Now even SSCs who have not gone into writs can take advantage of those subsequent decisions which are totally speaking order. They are not stay orders.
I think
Yes, sir.
You are correct.
Very right, sir. Very right.
You are correct, sir. But however, our department is not following the same. department is taking a view that these are decisions in the writ petitions, and writ petitions is applicable. The jurisdiction of writ petition is toward that particular SSC itself. So that's a general stand of the department. But what you have prescribed is, I think I fully agree with it, because they are all detailed orders, and these are all decided on principles, not on the facts of the case. So hence it should be applicable, but however, department is having a different view. I think now let us move towards the last part of our second last. So now we have two important parts. One is the virtual digital assets, which is I think in great demand, and everybody is asking about the taxation of how this virtual digital assets to be taxed. And there were certain amendments to the amendments also which have been moved in the while passing the Finance Act. So Gupta ji, if you can take virtual digital assets.
I'll take up. Sir, virtual digital asset, during this COVID-19 period, pandemic 19 period, VDA का एक बहुत बड़ा हम लोग वर्चुअल मीडिया में, टेलीविजन में, न्यूज़पेपर में इसका आया कि people have started and not making money, people have started minting money on this, going into these bitcoins and other things. Now the government was prior to the presentation of budget on 1st of February, there was huge reports that government is going to come out with certain strong legal litigation legal amendments or legal provisions to regulate the working of this. So by virtue of making this taxation of virtual digital asset, by making bringing a section 115 BBH, they have accepted, at least accepted, that virtual digital asset is a separate asset class. And in virtual 115 BBH, they have stated that income on transfer of any virtual digital asset on or after 1/4/2022 will be taxed at the rate of 30% plus cess and surcharge. Now, sir, income on transfer of a virtual digital asset, and they have stated in the proposed provisions that no deduction of any expenditure or any losses will be allowed while computing the gain on transfer, and only cost of acquisition. So, abhi, as you know, cost of acquisition mein we have the background of that historical decision of the Supreme Court in BC Srinivasa Sethi, that if there is no cost of acquisition, or if cost of acquisition cannot be ascertained in a particular situation, then since computation provisions cannot be applied, the charging provision fails. तो इसको नलिफाई करने के लिए अभी इन्होंने फाइनेंस एक्ट 22 में बोला कि कॉस्ट ऑफ एक्विजिशन के बाद आप विद इन इन्वर्टेड कोमा इफ एनी ऐड कर दीजिए, अगर है तो आप रिड्यूस करिए, नहीं है तो पूरे के ऊपर 30% टैक्स दीजिए. So that amendment has been brought out. Now, while making this amendment in 115 BBH, they have also stated कि भैया, not only the taxation in the hands of the seller or transferor, also in the hands of a payer of the consideration. आपको TDS का obligation लगा दिया 194S में. 194S में TDS का obligation लगा दिया कि once you make the payment of consideration for transfer, आप 1% TDS as per 194S आप deduct करिए और payment करिए. Now, sir, अभी जो एक amendment आया, तो इन्होंने बोला कि 115 BBH talks of profit on transfer of a virtual digital asset, gain on transfer of a virtual. So they said transfer is defined in two subsection 47. So transfer in as defined in 247 is applicable only for capital asset. Then people started saying on the lines of original 50C कि 50C तो transfer of a capital asset पे applicable है. So once I hold the land and building or both as a trading asset, it should not be applicable. So 50C was held not applicable. बाद में 43CA का जन्म हुआ उसको लेके. तो अभी जो फाइनेंस एक्ट 22 में ये अमेंडमेंट भी आ गया, whether you hold it as a capital asset or you hold it as a trading asset, in both the situations आपका ये 115 BBH की applicability हो जाएगी. So that distinction has also been removed. Now another thing is that पेयर के ऊपर तो आपने 30% टैक्सेशन लगा दिया. Suppose you gift it to a relative, which is a relative within the meaning of 56 to 10 read with 56 to 7, then whether the recipient would have any impact. So a recipient, if it is a gift to a relative, recipient will not have any impact, because if I receive any gift from a relative, then मेरे ऊपर कोई taxation नहीं लगता. But if it is a non-relative, then of course if the receipt is in excess of 50,000 rupees, then I am subjected under 56 to 10. But transferer के ऊपर 30% taxation लगता है. Recipient under 56 to 10 will be taxed under the other sources at the slab rate taxation. He or she will not be taxed at the flat rate of 30% in that case. वहां पर slab rate taxation होगा और gift to relatives आपका exempt रहेगा. Plus they have stated that ये जो TDS का provisions है, that will not apply to specified persons. Specified persons have been said that if I am a person whose turnover in the preceding financial year was less than 1 crore in business or less than 50 lakhs in profession, then I will not be hit by these TDS provisions. Or I am an individual or HUF not having any business person. So specified person. सर इसमें सबसे बड़ी प्रॉब्लम जो मेरे को वर्चुअल डिजिटल एसेट के ट्रांजैक्शंस में आ रही है, दैट प्रॉब्लम इज, आपने बोला कि 1% टीडीएस आपको कटना पड़ेगा. सर गोइंग बाय द रियल लाइफ सिचुएशन, गोइंग बाय द प्रैक्टिकल एस्पेक्ट्स, व्हेन यू बाय और सेल द वर्चुअल डिजिटल एसेट्स, दे आर परचेज्ड और सोल्ड ऑन अ डिजिटल प्लेटफॉर्म, एंड you as a buyer or as a seller, you don't know the identity of the other side, that is who is the buyer or seller. So if I buy on a digital and make a payment of 5 crores for purchase of virtual digital asset, sir मैं वो TDS काट के किसके अकाउंट में क्रेडिट दूंगा? Should it be given to the platform? No, platform is not the seller, he is not getting the consideration. The TDS की क्रेडिट तो विदाउट एन आइडेंटिफाइड पर्सन, तो TDS क्रेडिट, TDS डिडक्शन का ही मेरे ऊपर एप्लीकेबिलिटी नहीं है. There have been judicial decisions where interest amount was credited on the closing date of the debentures without identification of the debenture holders. Courts and tribunals have held कि आपको TDS का deduction का obligation ही नहीं है. So according to me, it is a very hastily drafted legislation. Lot of water has flown on it. Lot of litigation is going to be there. Things will have to be clarified as to the practical aspects and implications of this. केवल इन्होंने सेल और ट्रांसफर के ऊपर ये 30% टैक्सेशन लगा दिया, एंड दे हैव स्टेटेड कि हम इसमें फर्दर कोई आपका वो नहीं, और नो सेट ऑफ. अभी अमेंडमेंट जो आया है उसमें पहले ये लिखा था कि देयर विल नॉट बी एनी सेट ऑफ एनी लॉसेस. नाउ दे हैव सेड each digital asset, each transaction will be considered as a separate asset. Even virtual digital asset की अगर हमारा 4 बार ट्रांजैक्शन है और उसमें 3 में गेन है और 1 में लॉस है, तो जिसमें लॉस है वो हमको इसमें से नहीं सेट ऑफ मिलेगा. So only gains have been subjected to taxation, losses have been ignored. So that is going to be a very harsh provision according to me. Once you accept that it is an asset class, once you accept the genuineness of the transaction, once you accept, so why you are not permitting me to set off my losses when you are accepting my gains? That is my submission. And in absence of the identification of the buyer or seller, there will be difficulty in implementing this TDS provisions of 194S.
Thank you, sir. Patodia ji, if you want.
Gupta ji very nicely summed up the discussion on virtual digital asset. And as rightly said by Gupta ji, I only want to add a small thing, that when they are saying that each virtual digital asset will be treated as a class of its own, and you will not be even allowed to set off inter virtual digital asset profit or loss, whether it goes against the spirit of the act itself. Under the Income Tax Act, the definition of income given in 224, whether it will violative of that definition itself, and to what extent this kind of dadagiri, I will say, can be done. It is doubtful. Of course, जिनको बहुत कमाई हुई है VDA से, they will be the first to challenge this. But this amendment, as rightly said, done half-heartedly, and maybe amendments will keep on coming in such a situation. That's all I think.
Thank you, sir. I think the legal part, when we talk about this set-off, I think we should read and keep this income from lotteries in mind. So if you
Right.
see that a specific provision of taxation of income in lotteries is also similarly, and I believe that the board have taken investment or income earned through the transfer of this virtual digital asset as lotteries only, and they want to discourage it. So that is why they said that if you earn any income from that transfer of this virtual digital asset, pay tax 30%. If you lose any money, we will not allow any kind of a deduction, any kind of a set-off. That is not allowed. However, there are three important things which I just want to highlight here. The first important part, what have been left, and which is the question which has been generally asked, this amendment is applicable with effect from 1st of April 22 and onwards, meaning thereby that any transfer which have happened on or after 1st of April 2022, this will be governed by this 30% tax on the gross basis on in case of income only. But if any SSC have income prior to that, so any person who have an income during the financial year, let's say 21, 22 or 2021, and if they want to take this particular income as their business income and wishes to claim expenditure incurred in relation to those income, maybe brokerage amount, maybe the cost of depreciation of the computer, maybe any other expenditure which they have incurred, and even the loss what they have incurred in transfer of these virtual digital assets or cryptocurrency, which we generally say, my humble submission is yes, they are eligible. They can do so for all the transfers or all the income and losses which have been incurred on or before 31st March, 2022. So they are guided by the same principles as what we can do earlier. But for the next year, yes, we cannot do that. The second important part what I want to highlight is if we read the definition of virtual digital asset as provided under section 2 clause 47A. I just read this definition. Virtual digital asset means any information, code or number or token not being Indian currency or a foreign currency. I know at least 3 virtual digital assets which 3 countries have said that these are legalized currency of their country, meaning thereby there are 3 bitcoins, 3 coins, I not say bitcoins, there are 3 electronic coins which the foreign government have accepted as a foreign currency, and as per the definition of the virtual digital asset, these are not covered in this definition. So meaning thereby any digital asset which is either a coin or a lithium coin or whatever, if some country have made it as their official currency, then these are outside this definition. They are not liable for 30% tax, and they will be governed by the normal provisions of the act itself. So this is one important observation that I have here. The third, which is also important, I think Gupta ji have just mentioned about that how the TDS provisions will be implemented specifically in case of stock exchange or the crypto exchanges which we have. Sir, for this, I draw your attention for 195. So under section 195 also, whenever there is a transfer of an income or anything with sum is chargeable to tax in India, the person who is responsible for making this payment is under an obligation to withhold tax. So a non-resident or a foreign company who frequently traded on their Indian stock exchanges, and if they earn any short-term capital gain or a long-term capital gain which is liable to be taxed in India, they are also under an obligation that their income, the TDS should be deducted. Now, who will be deducting? So for example, I am selling, I am buying the shares and a non-resident is selling the shares. So I am under an obligation because I am buying the shares of the non-resident to deduct tax under 195. However, I do not know because there is a stock exchange in between. So in those provisions, the board have made it very clearly. It is the last person who actually credits the income in the bank account of the non-resident, which is even not the stock exchange, but the broker of a stock exchange. So for example, that non-resident have a demat account with ICICI Securities. So I have paid to my broker paid to the stock exchange paid to the broker of that non-resident, and that is a broker of non-resident who is actually paying to this non-resident. So in those scenarios, the broker is under an obligation under section 195 to withhold tax and pay the credit to the non-resident, and that is what is going on as on date, whereby the brokers are deducting tax at the rate of 15% in case of short-term capital gain and 10% in case of long-term capital gains. Taking that analogy, and when I compare the wordings of both the section, under section 194S also, the similar provisions are there, and I believe that the clarification will be issued soon, and the intention of the legislature is also that the person who at the end actually pays to that person, being a resident, that I purchased a Bitcoin or any virtual digital asset from, let's say, a crypto exchange in India. So there is a Wazir crypto exchange. I buy that virtual digital asset from crypto exchange in Wazir, which is situated in India, and I made a payment to them, and they made a payment to somebody who is a resident here who have transferred it, and there is no broker involved in this. Then Wazir crypto exchange needs to withhold this tax. If there are brokers involved, so I have a broker, they have a membership of this Wazir exchange, then Wazir also again have a broker, and there is another person who is there, and this broker is paying to them, then broker has to withhold. Now the big question here is, there are exchanges which are even not resident in India. So there are non-resident exchanges. So there is an exchange, let's say in Singapore, there is a crypto exchange in UK, there is a crypto exchange in Dubai, and people who are resident in India, they are buying and selling these virtual digital assets on those exchanges. It's a big challenge for the Indian government, specifically the board, the CBDT, to take them into the tax net. How a crypto exchange situated in a tax haven like Ireland or maybe a Dubai or maybe any other places, why they will deduct this 1% TDS while making payment to an Indian resident? Saying that, okay, because you have 194S and I am the person who is responsible for making to a payment for a transfer of a virtual digital asset, I have to withhold 1%, and then they have to file all their return of income, etc., etc. So that's again a big question, that how the compliances will be done, at least for the stock exchanges or the crypto exchanges in India, they will do the compliances. For the crypto exchanges outside India, I have my doubts whether they will make the compliances or they will not make the compliances. One thing which I want to mention it here very clearly, for all the crypto exchanges situated outside India, if somebody is making payment or somebody is investing, buying and selling, the violation of FEMA is still there. So violation of FEMA and the proceedings under the FEMA regulations might come up if somebody is doing these transactions. So keep take care of the FEMA regulations also while doing these transactions. But for the exchanges in India, yes, this can be done. And if you are making any kind of a transfer, rightly pointed out by sir, that if it is covered under 56(2)(10), then it is slab basis. But if you are transferring it, then it will be a flat 30%. So this is all on virtual digital assets. Sir, if you want to add something, or let's move to the next part of this.
Avinash ji, I have a suggestion. Since the time is only up to 2 p.m., why not let us keep it open for discussion with the participants, because 15 minutes to hai hamare paas.
Sir, I think
if you want,
sir, there is
I agree.
Sir, there is only 3 provisions of TDS which is important and left. One is the provision for 194IA. Another is the provision for 28(4), which you have already covered under 194R. I think somebody have raised a question also to give it in detail. And another last is the on 206AB and 206CCA. So these are these all amendments.
194IA. Let's complete it as requested by you. Now 194IA is 1% TDS is to be deducted if there is a consideration for transfer of a land or building or both. Now it has been stated that अभी तक हम लोग जो actual consideration होता था उसके ऊपर 1% TDS करते थे. Now the Finance Act 22 says that you should deduct it on a stamp duty value on the lines of 43CA or 50C, because taxation under 50C and under 43CA is done if the stamp duty value is higher on the higher value. सो अगर मैंने 1 करोड़ की कोई प्रॉपर्टी खरीदी है और अगर 1 करोड़ 25 लाख रुपया उसकी स्टैम्प ड्यूटी वैल्यू है, then the TDS should be deducted not on 1 crore but on 125 crore. Now what is to be considered important here is that any buyer of any immovable property, being land or building or both, has to obtain the stamp duty value on the date of agreement sale itself, because the taxation under these circumstances will be that this 43 CA and 50 C says that if the agreement and the conveyance, there is a time lag, there is a difference of time, then the stamp duty value as on the date of agreement will prevail. तो ये तो एक प्रिकॉशन अब लेना पड़ेगा बायर्स को, लेकिन नाउ द गवर्नमेंट डज हाफ हार्टेड. आपने 43 CA और 50 C का रीजन बनाया कि वहां तो आप स्टैम्प ड्यूटी वैल्यू के ऊपर टैक्सेशन करते हो, TDS आप एक्चुअल कंसिडरेशन पे काट रहे हो, तो भैया वहां तो आप हमको 10% का रिलैक्सेशन भी देते हो दोनों सेक्शन में. 43 CA में भी बोला है, 50 C में भी बोला है. If my stamp duty value and the actual consideration, the difference is within 10%, तो हम actual consideration को ही हम correct consideration मान लेंगे, and there will not be any addition on that account. So that 10% is missing, for which representation was also made, but the government did not consider it. So that is the one aspect of 194 IA. 28(4) का जो आप बोल रहे हो, the 194R, that if any benefit or perquisite arising as a result of business or profession, whether convertible into money or not, 10% TDS is to be deducted. Sir, इसमें either the benefit or perquisite should be wholly in kind, or it should be wholly in partly in kind or partly in cash. But if it is 100% in cash, no TDS under 194R. Only when it is convertible, only it is wholly in kind or partly in kind. But if it is wholly in cash, no benefit or perquisite of that 10%. And mind you, the object of this enactment was that people getting such benefits or freebies, the recipient did not use to declare it as their income. Now, because of this TDS mechanism, now the department and the revenue will have a mechanism to catch hold of or to issue notices to the recipients to ensure that they also declare it as their income under 28(4). So it is just to ensure this thing that this TDS mechanism has been brought into statute too. और 206 AB और 206 जो आपने बोला है, that is higher rate of TDS or TCS for non-filers. So this amendment came last year, that if the payee has not furnished its income tax return for the 2 immediately preceding year, for which 139(1) date time has expired, then in that case आपका हायर रेट पे TDS और TCS का एप्लीकेबिलिटी होता था फॉर द नॉन फाइलर्स. नाउ दिस वाज द 2 years कंडीशन. तब हम लोग ये सजेस्ट करते थे कि इफ द फेलियर इज ओनली फॉर 1 year तो इसका एप्लीकेबिलिटी नहीं होगा, बट नाउ दे हैव रिड्यूस्ड इट फ्रॉम 2 years to 1 year. सो अकॉर्डिंग टू मी दिस इज गोइंग टू अफेक्ट टू सो मेनी पीपल. अब timely furnishing of return has assumed its great importance from various parameters, ये TDS के एंगल से, पेनल्टी के एंगल से, लेट फी के एंगल से, प्रोसिक्यूशन के एंगल से 276CC में. These, I think these are the basic things for all the 3 TDS provisions you discussed.
Patodia, you want to add, or should we go ahead with the questions?
No, let us move ahead.
I just want to add one thing, sir, here is with respect to the stamp duty value. So 194 IA. So I agree that the bare reading of the act says that you have to deduct 1% tax on the amount of the consideration paid or the stamp duty value, but it has never said which stamp duty value of which date. So for example, I have taken a property from a builder on a construction linked plan in, let's say, in 2015. And in that 2015, the value of the property is 2 crore. I have paid 50 lakhs upfront. Remaining, I have to pay in different parts of the things. So I finally got this property transferred in the month of, let's say, September 2022, where the stamp duty value is 4 crore. However, my consideration is only 2 crore. From this amendment, it says that I have to withhold tax on 4 crore rather than 2 crore. However, the act says under 50C that it has to be stamp duty value which have been on the date of agreement itself, which is 2 crore, So there was some confusion. I personally believe that stamp duty value should be taken in relation to 50C, read with this new provision of 194 IA, which remains to be the date of stamp duty value on the date when the agreement have entered and payment have been made through an account pay check. So 2 crore is there, which we can take it. Yes, Gupta ji, you want to say something?
No, I fully agree with what you say, that it should be the stamp duty value on the date of agreement to sale itself and not on the deed of registration. That is a undisputed thing according to me.
Sir, there is a question of Rakesh Gupta ji, who have asked whether the conference expenses of the distributor will attract 194R.
The conference expenses of the distributor should not attract, because that is not a benefit or perquisite arising in the course of. When it is a benefit or perquisite, it must satisfy the test of a benefit or perquisite. I am a manufacturer of textiles. I am organizing a conference in Calcutta, and my distributors are spread across the country, and I invite them that you please join this, and the company is likely to reimburse partly or wholly of your travel and boarding expenses if you join, because it is for the purposes of carrying on my business. What benefit or perquisite is arising to those? When it is a direct benefit in the form of providing a say LCD TV, or I am taking you to world tour for excursion, not related to any this thing, that once I establish and link it to my business, and the very purpose of business is established, then, and it is not a benefit or perquisite arising to the SSE, I for one would submit that 194 hours should not come into picture.
Naveen ji, I want to ask a question. So Naveen ji, I have unmuted you. You can ask your question.
Sir, nowadays what the companies are doing, they are making a product launch. Indian dealers are taken to Bangkok or Singapore, and 4 days trip is there, and product launch parties for only half an hour to show that there is a product launch. In such cases, 194 hours will be applicable or not?
Sir, form and substance has to be seen. If it can be established that the product launch is only a make-believe or sham or bogus, but if the predominant objective is launching of product itself, once again, as we have discussed, much will depend on the facts and circumstances of each case, wherein you have to, if the predominant objective is launching of product, no 194 hour. But if it is only a name given, but a form given, but the color substance is different, then you will have it. So
I feel, sir, that is one need also. One need to see is why there is a need to launch the product in Bangkok.
Yeah.
If it has some relation to, so if you are launching a product internationally, then okay, you can do it in Bangkok. But if you are doing a product which is to be used and marketed only in India, but you are launching it in Bangkok or any other country, then I believe it is nothing but a perquisite and a benefit being given to people.
They want to launch other products also.
Yes, sir. Any other question, sir? So there is a question of Mr. Naveen which is not related to the subject. This is a question not related to today's topic. Even then, I will request you to please respond. In faceless income tax appeal, my appeal is allowed for assessment year 1920, which will result in income tax refund. The appeal was allowed in December 21, but still I have not got fresh assessment order. So fresh assessment order to aata hi nahi hai, nor income tax refund. When I call CPC Bangalore, they say to go to the income tax ward. When I went to income tax ward, they said as appeal is allowed online, they cannot help. Whom should I contact? The case is related to PFESI case.
Sir, this should be taken with CP Gram at the highest level.
I think it is only the normal assessing officer, jurisdictional JAO, has to pass a order which is an order giving effect. So there is no fresh assessment order
Yes.
Or
which is to be passed. It is an order giving effect under 154 that needs to be passed either by CPC or by the JAO, jurisdictional assessing officer, and then only refund can be issued to you.
or if the demand is high, refund is high, then please go to writ court.
So PFPSI का कितना डिमांड होगा?
Refund.
नहीं वही मैं कह रहा हूँ सर, PFPSI में कितनी कितनी सैलरी होगी और कितना डिमांड
Depend
होगा?
करता है sir. Recently, I had to argue a case of PFNSI running into crores of rupees, sir. So much will depend on the size of the organization and number of employees and all those things.
तो सर बाकी एक रमेश अग्रवाल जी हैं सर, वो आपका नंबर मांग रहे हैं, उनको अपीलेट कराना है. तो ऑर्गेनाइजर्स में रिक्वेस्ट टू प्लीज share the contact details of the speakers of Gupta ji and Patodia ji for this. For existing charitable trust, whether form 10A and 10A be required to file. Sir, ye, I do not get the full question.
Sir, it is required to be filed, but 10AB के लिए कल परसों ही CBDT का circular आया. They already extended it to 29th, 30th of September.
6
So,
months के लिए.
हाँ, 6 महीने का टाइम दिया गया है इसमें.
Ravi Kapoor ji का क्वेश्चन है सर, whether expenses incurred on medical conference including reimbursement of travel expenses of doctors, including payment to doctors by medical devices companies allow the expenditure is allowed under 37(1).
सर MCI की गाइड जो उन्होंने MCI ने जो गाइडलाइंस इशू किए हैं, those have to be read in black and white to understand whether it is barred or not. I am not going into that aspect. You need to read that. If that MCI guidelines are prohibiting or permitting, then it is definitely not allowable expenditure.
I think, sir, in this MCI have said that you can call any doctors for the conferences and knowledge enrichment. So this is fully allowed as per MCI guidelines.
So
you can do it.
Instead of income tax, we have to read MCI guidelines to एकदम comma full stop आप पढ़िए. वो अगर permit करती है, no problem. If they don't permit, you are hit by explanation 3.
And even the free samples to the doctor as well as
that is barred. That is barred.
Free instruments to medical instruments to the doctor. So like
that is all barred. Apex led
all
Supreme Court decision and explanation 3 of the 22 Finance Act.
So many doctors are giving stethoscope, this thermometers and all those small equipment. I think these are all allowed.
If it is on record, then what is being given is income of the concerned doctor under 28(4), and if it is disallowable for the person company giving those things.
Avinash sir, I think
Yeah. I think there was some problem.
Some
so now
video. And Subramaniam ji is raising his hands. I think we can take up this question, and there are
this question has already been discussed. The benefit of payment of taxes under 140A already made, and people opting for 139(8)A, the benefit will be available.
I think there is one question on international tax, whether the loss of US LLC, which is subsidiary of Indian company, can be deducted from the profits of Indian parent.
So much will depend upon the Indian parent. If the Indian parent is a resident in this country, then the losses overseas, and one will have to go to the tax treaty of USA. But as per the Indian tax laws, that loss is to be allowed. If the global profits have to be assessed in India on the basis of residential status, even the losses or overseas losses will have to be set off.
I have a different opinion.
Please.
To this. Actually, the issue is about LLC is because in USA, the LLC is a transparent entity. So what happened in USA, if there is an Indian company and there is another person, if both are the partners in an LLC, then USA, they do not tax the LLC as such. They tax the individuals as well as the Indian company. So if let's say there is a US LLC A and Indian company X who is a partner in LLC, so in USA, the assessment is done in the hands of the X company because it's the transparent entity. when it comes to the Indian entity, so the question is whether we can set off that loss under the Indian part or not. I believe no. Because India tax law, when we talk about the situation at Indian tax law for LLC. LLC is like a firm. So we treat it LLC as a separate assessee and we do not treat it as a pass-through entity. We do not treat it as a transparent entity. And there is a report of OECD on partnerships whereby one country treat a partnership as a transparent entity and another country treat a partnership as a non-transparent entity. So the report clearly says that the country who gives the benefit, the point of view of that country has to be taken, meaning thereby the point of view of India has to be taken. And in that sense, if we take it, so India treated LLC as a separate assessee. When it is a separate assessee, then LLC's profit or loss cannot be added to the loss or profit of the Indian entity unless the same is distributed. So even in case of profits, unless this LLC will distribute the amount to the India as a dividend or so, then till that time it is not taxable. If the dividend is or income is not taxable in India, then loss is also not allowed to set off. However, the sir's view, what he've taken is also valid. If we treat LLC as a resident in India because of the poem, because of the place of effective management, the LLC becomes somehow a resident in India. Then yes, the situation may change, keeping the facts of the case different in a different way. And then we have to see what exactly is the DTA between India and USA permits us. It may be permitted to set off, but in a normal routine course, it is not allowed to be set off against the Indian income. If we talk about the standpoint of the Indian revenue, they are taking the benefit of this partnership report of OECD, which prohibits the Indian company to set off those losses. So this is the situation as far as this LLC losses are concerned. Any other question?
I think, sir, Subramaniam, she is continuously asking one question. So
please unmute him. Now you unmute him.
Yes,
He will ask the question.
No, but I think his hand is not raised right now. He is asking a tax paid under section 148 will be given credit under section 140B. He is asking this.
I think
Already, I think 2-3
That
times
is already
we have
answered.
this question.
That is already answered, I think.
Twice.
So I think there is one Oppo F9 who have raised hand. I have unmuted him, so he can ask the question. You can unmute yourself and then ask the question. So there is somebody from Oppo F9 Pro.
Yeah, sir, thank you very much, sir. Sir, मैं प्रवीण बात कर रहा हूँ कर्नाटका से.
Yeah, sir. Tell me.
हाँ सर, वही एलएलसी की यूएसए एलएलसी की जो बात है, हमारे असेसिंग ऑफिसर बोल रहे कि मैं खाली प्रॉफिट को मैं टैक्सेबल करूंगा, मैं लॉस अलाउड नहीं करूंगा. तो उन्होंने आज तक प्रॉफिट, जब तक प्रॉफिट हुआ तो चुप रहे, उन्होंने उसको टैक्स लगा दिया, हमने टैक्स भर दिया और क्रेडिट भी ले लिया जो वहाँ फॉरेन में भरा था वो. अब जब लॉस हो गया, हम डिडक्ट मांग रहे थे तो उन्होंने बोला नहीं, हम लॉस नहीं देंगे. तो इसके बारे में थोड़ा आपको पूछने का था. और दूसरा प्रश्न ऐसा था,
सर, if they have taxed your profit in past, then whatever practice he is doing, he has to make it a continuous practice. If he tax your income, then he have to allow you losses also. That is very clear from various judgments.
सर एक आध जजमेंट कुछ मिल सकता है मेरे को. पटनी कंप्यूटर का एक जजमेंट है, वो मेरे पास है, और कोई दूसरा सा स्ट्रॉन्ग जजमेंट है जो कि मैच हो सकता है.
फॉरेन टैक्स क्रेडिट की जजमेंट्स देखिए. फॉरेन टैक्स क्रेडिट की जजमेंट्स में क्या होता है, बिकॉज देयर आर कैलेंडर ईयर एंड देयर इज अ फाइनेंशियल ईयर. सो इन दोज जजमेंट्स दे हैव सेड कि अगर मैंने जनवरी टू दिसंबर तक की इनकम ली है और उसका टैक्स लिया है और उसी का क्रेडिट लिया है, तो जनवरी फरवरी मार्च ऑफ द नेक्स्ट ईयर जो है उसका मैं इनकम नहीं लूंगा, because that have been taken in the next year. So there are many judgments which says that if the foreign tax credit is taken on a corresponding income, even though outside the purview of the financial year, but that have been constantly implemented and taken this, then these foreign tax credits are allowed. So you can take benefit of those judgments in this case.
मतलब वो लॉस को मेरे को अलाउ करना ही चाहिए कौन सी भी परिस्थिति में.
Yes.
सर और एक क्वेश्चन था.
Yes.
हेलो.
Yes,
हाँ सर अभी हमारे, हाँ सर हेलो.
प्लीज आस्क सर. प्लीज आस्क सर.
हाँ, हमारे एग्जिस्टिंग एक चैरिटेबल ट्रस्ट है, बहुत पुराना है, 10 साल का है. हमको 12 वे आउट 80 अलाउ था. अभी हम जो ये कर रहे हैं, फाइल कर रहे हैं, 10A को फॉर्म भरने का है, 10AB को फॉर्म भरने का है.
यस.
10A को फाइल करने का है, 10AB को फाइल करने का है.
So 10A is to be filed for 12AA registration and 10AB is to be filed for ATG registration.
So both 10A और 10B दोनों फाइल करने का.
Yes.
Okay sir. Thank you sir.
Any other questions left? So I think, sir, there is no more questions. Thank you very much, sir. And it was really wonderful session with both the learned speakers. It's a different experience altogether that I have with both the learned speakers. And thank you for allowing me to moderate this session. Now I'm giving back to the organizers of the webinar. So towards the organizers.
Avinash Gupta ji, we also thank you very much
Yes,
for very
very,
wonderfully conducting and moderating this
moderating
session.
the seminar so nicely. Thank you, Gupta ji. Thank you, SS Gupta ji. Both of you.
Thank
And all the
Patodia ji.
audience.
Each of us have, I think, enriched each other.
कोणाला फोन लावला सर?
The benefit was taken by
काय
the
तुटले
audience.
काय तुटले?
I thank personally or to all the panelists and Avinash Gupta ji for moderating the session, and would request both my committee member Naveen Singhal and Girdhari Sharma. I would request Girdhari Sharma first to kindly offer vote of thanks.
We are fortunate to have with us three tax experts on the subject. Sri Avinash Ji Gupta, moderator from Delhi, Sri SS Gupta, and Sri Ramesh Ji Patodia from Calcutta. We have discussed in detail the recent amendments and the ultimate effect of the same on the persons who are dealing with the day-to-day matters. It was interactive discussions, and the queries raised by the members has been suitably replied. I thank you, all the participants who are sparing their time to attend, and we are grateful to the moderator and the panelists who have given their consent and participated and enriched us. Thank you, sir.
Thank you, Girdhari ji. Now I would request Naveen Singhal to please give his closing remarks so that we can end the session.
It is my honor to thank you, Bia. It is my honor to thank our wonderful moderator and our learned veteran speakers. All of you have enlightened us with flavors of budget, various amendments, backdoor amendments, and gave us deep insights about various topics and cleared a lot of noise around them. This session was a value addition for all of us. Thank you, Avinash sir. Thank you, SS Gupta sir, and thank you, Ramesh sir, and all the participants. In spite not being a CPE event, 120 plus people participated. Also, I would like to thank all the committee members, Nitesh sir, Naveen ji, and all of you. All of you, please stay happy and stay safe. Thank you, sir.
Thank you,
Thank
sir.
you.
Thank you.
We must compliment the organizers to create this event not only in the lecture form but in a very, very nice discussion form. And at least I learned a lot with the panelists and the speakers.
We are looking forward to further such a discussions on the subject, sir.
We are humbled, sir. We are humbled, actually.
Thank you, sir. Thank you, Gupta ji. Thank you, Patodia ji. It's a wonderful.
Thank you, Avinash ji. Thank you, Ramesh ji.
Thank you.
So we'll meet you in person soon when I come to Calcutta. Or if you happen to be in Delhi, sir, just
Definitely.
you know,
Yes,
we'll.
it will be a pleasure, sir. Please, aye.
Thank you, sir.
Okay, sir.
Naveen, please stop the recording and YouTube live and then end the session.
Thank you.